There we go. So, yo, what is up for everyone on the YouTube replay? I hope you're having a great day. The market isn't having too great of a day right now. There was some news that dropped literally today that Oracle and OpenAI both are losing money. For they overspent basically on NVIDIA chips, and they can't rent out the excess capacity or something like that. Anyway, that's why NVIDIA had that sudden drop out of nowhere right here because of that news. But anyway, let me give you a quick stock portfolio update. Hey, what up, Looney? Good to see you, man. In our main account right here, we're actually down 0.85% on the day, but still year to date, we're doing pretty good. We're still up 14% year to date. So I'm not freaking out over this small little dip. If anything, I'm actually ready for a little dip because I have a lot of cash on the sidelines. I'm ready to deploy that and buy some companies. April was crazy. We were down 15% in April, and now we're up 14% year to date, which is crazy. Also, here's my total percent change on every stock. We're up on every stock except for Carlisle Group. We're down 1.4% on them. And every stock is red on the day except for McDonald's. When McDonald's is green and everything else is red, it's a defensive day. Why did NVIDIA dip again? NVIDIA dipped because Oracle and OpenAI both came out and said today that they're losing money from they can't rent out their excess NVIDIA chips capacity, so they're losing a bunch of money. Why are you investing in McDonald's? McDonald's is one of the best investments I think out there. It's such a great company. Now we also have a Roth IRA right here. Our Roth IRA hit an all-time high yesterday, but we're slowly coming down a little bit. Here's our total percent change on every stock. InnoData has been our big winner. We have a REIT in here, Iron Mountain. We also have Main Street Capital. Main Street Capital has been struggling, down basically 7% this month. We're only up 3% on them, but they're one of the few stocks that pay a monthly dividend. But yeah, that's our Roth IRA. I'll also share with you my Webull portfolio that is actually green on the day. We're up 0.65%, and all time in this account, we're up 18% all time. So we're doing pretty decent. Here's what's green on the day. AMD's green again. AMD was already up 25% yesterday. AMD's been having a great week. Then SoFi's up 5.7%. SoFi's having a great day. Progressive Corp, Reddit, TAP, and then we do have some losers. Zoom is down 2, Axon's down 1.5, UiPath just went red. I think UiPath was green earlier today. Anyway. So yeah, that's our Webull account, and then here is our buy and never sell portfolio. If you look in the top left, that's what I've called this a portfolio. Basically, once I buy a stock in here, I try not to ever sell it. I really just try and pick high quality companies and then just hold them for the long run. And these are all the stocks that I have picked in here, and we are down 0.71% on the day. But yeah, that's just following the momentum of the market. I'm officially up 100% on IBM. Oh, that's awesome, dude. Hey, plus the dividends you receive on IBM, that's crazy. Hey, what up, I got this? How's it going, man? Yo, what up, copy paste profit? What up, dude? AMD move was insane. Charles said PATH. Yeah, what up, Charles? What do you think about plug stocks? Should I hold or take profits? Actually, let me know if you want me to look at UiPath. I don't know if he was asking me to look at that one. Actually, we'll probably look at them anyway. But here's Plug Power right here. It says the Plug Power falls after company announces a new CEO. So there's a new CEO working for the company, but there's been a lot of momentum in the whole solar space the past couple weeks here. But here's the thing, and here's what explains why the stock went from $60 all the way down to $3. Here's kind of what happened here. This company just can't get profitable. They lose, a couple hundred mil every quarter. They lost 230 mil, 200 mil, 1.3 billion. That's a huge chunk of the entire market cap, like 30%. The sad part is they just burn money every quarter. And again, this is a electric vehicle charging company, or they're also in hydrogen. Maybe you charge hydrogen too, but they kind of just sell a commodity. I don't know how much net margin they will have when they get profitable, but it's just tough to buying a company that burns through a couple hundred mil a quarter. But that's why I'd probably trim a little bit there. Hey, what up, Louise? He said, new follower here. Can you go over your dividend portfolio? Yeah, here, I'll show you this one more time. Yeah, if you got any questions for me, let me know. By the way, if you missed anything, I'm streaming on YouTube as well, and you can replay it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but yeah. You can watch the stream on replay. Sometimes I talk too fast, but yeah, here's my dividend-only portfolio. Every stock in here pays a dividend, but you're probably saying, hey, most of these are dividend growth companies, and you're right, like Google, Meta, these all have 0.5% dividend yields or less, like United Rentals, Constellation Energy, 0.3% yield. But it's the stock price appreciation that makes up for it. So yeah, I only get 0.1% yield on Google, but I'm up 50% on the shares. They have some really nice stock price appreciation. So yeah, really I should rename this to my dividend growth portfolio. Every stock in here must pay a dividend, but most of the yields are really low. And I have a different goal with each portfolio. This one is my risk on portfolio. If you look in the top left, I love being fully transparent. Then I'll get back to the stock analysis here. Sorry for the stock portfolio update, but yeah, this is our risk on portfolio. I basically buy a bunch of risky stocks. Sometimes I'll do swing trades. Some shares in here I'm just going to never sell, but some stocks I plan to maybe sell out of, swing trade, whatever. And then of course, this is our never sell stock, where once I buy a stock in here, I never sell it. Okay, let's get back to UiPath right here, because actually Isaiah, what up, dude? He said Verizon. Let's actually look at Verizon right here. RGTI long term, yeah, long term RGTI does not look good here. But maybe we'll get to RGTI. We'll look at them next. So how can I, what app is this? Yeah, hey, what up, Christian? If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, if you want to start, you got to have a brokerage to buy stocks on. This is my favorite, brokerage to buy stocks on, link tree in bio, first link there. But here's Verizon. This is a company that I believe might be a dividend trap. If we look at, or not a dividend trap, I think it's just like, you're not going to, let me rephrase everything I said. This is a stock you buy to maximize your income, because look at this yield. You get a 6.5% yield. And I didn't mean to say it's a dividend trap, because the dividend is actually sustainable. It's really sustainable, actually. They can actually afford to raise the dividend a little bit. But you get a 6.5% yield. But here's the thing. Verizon stock is the same price that it was back in 1998. So you bought the stock in 1998, you're actually down on your position. And there was something that happened yesterday. Let me see if there's any AI news we can find. Oh yeah, Verizon got a new CEO. The former PayPal CEO. I guess the market didn't like that. Verizon negotiates $9.8 billion EchoStar Spectrum acquisition. Verizon Business launches GE Veranova launch. Okay, whatever. So that's a dividend play. I don't think I wouldn't expect that stock to outperform in the long run. Hey, Kentucky said get into the weekly paid dividends. Yo, those I don't love those. You would want to buy the weekly paying dividends or the monthly paying dividend ETFs when you're close to retirement. If you're like 10, 15 years away from retirement, I would stay away from the Verizon. I'd stay away from the weekly, monthly covered call ETFs. So let's look at RGTI. You're right. RGTI has only gone up because the momentum is insane. Check this out right here. But here, I'll give you my pitch on why I wouldn't. Again, this one will probably continue to do good. This is the market you want to own these kind of stocks in, because the momentum's real. The Qs at all-time highs, or Qs are like less than 2% off all-time highs, but pretty much all-time highs. But that's why the momentum is insane. But here's why I think it's hard to trust this name. And I'm going to just show you the numbers for yourself, and you can draw your own conclusion. If you look in the top right, the market cap, they're a $14 billion company. And I've done a lot. I've been streaming for a while, but I've seen a lot of $14 billion market caps. And for a company, like, this is the tough part. Like, here's why I don't think this is worth anywhere near $14 billion. The revenue this quarter was down 42%, and the revenue was only $1.8 million. So a $14 billion company doing $1 to $2 million a quarter, that's declined 40% year over year after falling 7%. Like, this is rough, and not just, no revenue, but losing 20 mil a quarter. So I'd be tough. It's a tough sell. Again, it's a momentum play. You'd want to swing trade. You want to have a plan to get out of this stock if you buy it right now. I don't believe this is the kind of stock you just buy and hold forever that you can trust. I think you want to swing trade that one. But that's a quantum play, and the momentum in the quantum space has been real recently. It could be like the next AI crave. I don't know. Why did Ford crash today? Yo, Ford is a company that, first off, you just don't want to own, I think, especially if you don't plan to retire for a long time. Like, if we look at Ford in the year 2000, this was $25. It's 50% lower. And again, I just don't think this is a stock you buy to outperform the market. It's like another Verizon type stock. You you buy it for the yield, because check this out. You get a 6.28% dividend. Their dividend is sick, and had to get cut, but then they brought it back. But yeah, 6.3% yield is pretty good. Let's see. Again, law of large numbers, it's hard to grow this, but sales are up 5%, and dang, the profits fell 72%. I mean, they're barely making any money anymore. Very competitive. With Tesla lowering prices when they did a while back, that really squeezed Ford's margins. It squeezed Lucid. Tesla basically is the reason Lucid and Rivian and some of these, well, not just that reason, but anyway, wouldn't buy Tesla either. It's heavily implied. Oh, hey, what up, RMC? Okay. Rich tech stock. All right. This is another, okay. We're looking at all the momentum stocks today. So here's the thing. With rich tech robotics, again, it's been a great own before today. But would I buy this stock at all time highs after it's up 10%? If you're looking for a robotic stock to just buy and hold forever and to really trust, this is the tough thing. I mean, again, I just can't trust this. They did 1 million in revenue. I've looked into this one, by the way. I've looked at all the robotic stocks, Symbiotic, they have no IP or patents, no like nothing exclusive or to them. The revenue, first off, is down 20% year over year. Revenue's down 20. They're losing a couple mil a quarter. And again, what's the this one's not as bubbly as the other stock we looked at, but $1.3 billion company, and you're pretty much buying a startup. Like you're paying for so much future uncertainty. Like you're really buying hopium here. You're really hoping they can turn this around. The analysts expect it to turn around. I mean, expecting 2 million in 2 quarters. I mean, they missed on expectations the last 2 quarters on revenue. Again, I think the momentum's great right now, but tough stock to just buy and never sell. If you're looking for a real robotics name, here's my favorite robotics stock, by the way. Hopefully, would I rather buy Rich Tech Robotics at all-time highs or would I rather buy Symbiotic at all-time highs? I'd rather buy Symbiotic at all-time highs. And no way, Isaiah. Dude, thanks for the heart there. I really appreciate that. Yeah, we can. Oh, actually, Isaiah, we can't really look at DKNG. Maybe we'll look at it. Actually, we will. That's just an industry. Every time I talk about it, TikTok takes down my stream. So I just don't want to really, I try to just avoid those stocks. But we'll look at them though. And if you got another stock you can look at, let me know. But I just can't. But here's Symbiotic. Thanks again for that gift. This is my favorite robotics play. They have over 1,500 registered IP and patents for the robotic systems. They're a warehouse robotics company that helps out Walmart with their warehouses, and it saves them a lot of money on employees. And if we look at the shareholders for Symbiotic, Walmart loved this company so much that Walmart took a 13.5% stake. So if you own Walmart stock, you technically own a little bit of this company. But remember, we just looked at Rich Tech Robotics. They have 1 million in revenue a quarter, and it fell 20% year over year. Well, here's a company with real sales and real growth and real intellectual property. Like the sales are up 25 in a real partnership with Walmart. Revenue's up 26 after it grew 50, after it grew 60, after it grew 160. Like the revenue growth is nuts over here. So anyway, that's what I really like about Symbiotic. They're beating on expectations. Like, look, analysts expected 533. They reported 592. So yeah, pretty cool. What about buying and never selling Lululemon? I don't think that one is a good 10-year hold. I mean, compared to like some other stocks, I mean, apparel just, and like Nike too. Yeah, you need to link it. Yeah, hey, Mindful, this is a brokerage right here where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, first link there. Yeah, it's my favorite app to buy stocks on. Hey, Lulu, what up? Yeah, what a day with all the NVIDIA news. Harsh said, what app is best? Yeah, hey, in my opinion, the best brokerage in my opinion is just the one I'm on right now. If you're on the TikTok, it's in the link tree in my bio. If you're on the YouTube stream, it's in the description. But anyway, here's DKNG. I can't talk about the industry, but DKNG is actually being out-innovated by Robinhood right now. Like, this is what they do. If you look super quick, that's what they do. And they just can't get profitable. I know certain states are hiking taxes on this industry, but, they made money this quarter, but all the other quarters, they lost money. So there's hopefully, let me check the estimates for EPS. So actually, they're supposed to get more consistent. Yeah, actually, that's a good improve. So maybe by this time next year, they're going to be making a lot more consistent net income. That's good. Growth is good over here as well. This is what I like. Revenue's up 37 after 26% growth after 87. So I really like the growth on the sales here, and they should be. It's not the end of the world. Actually, I do like that one more than dislike. I do. But I know Robinhood over here, you can kind of do some sort of the similar stuff now with their prediction market, which is kind of cool. Let's see. Pfizer a 10-year hold? I don't think Pfizer's a 10-year hold. Just because Pfizer, if you look at them, like, oh, hold on here. I just realized I disconnected. Uh-oh. That's not good. There we go. Sorry. All right. My phone was disconnected. I didn't even realize. Stupid Apple Play. But anyway, here's Pfizer again. I don't think Pfizer's a 10-year hold. This is one you buy when you're ready to retire. This is the stock you buy after you've made a lot of money compounding in tech stocks. Then you buy this to maximize your income. Because look at this. You get a 6.5% dividend yield. But again, wouldn't don't expect this to really do good in the long run. Again, Pfizer's the same price that it was in 1998, 25 years ago or 27 years ago. It's tough. But, if you're looking for a long-term hold, most likely this is the better pick. Just the QQQ, the NASDAQ 100, it's the top 100 tech stocks. Like, this is what you want to own. That's probably going to CAGR at like 10% a year or something. So anyway, is Pfizer like Ford and Visa? Or no, Visa's a good one. I love Visa. What do you think of the movement on LAC? Lithium Americas, yeah, this is the stock that is rallying up after the government is negotiating taking a stake. Let me see right here. US DOE takes 5% stake in Lithium Americas. That's pretty cool. US government plans 50 million investment in Greenland rare earth following America. So yeah, anyway, the sentiment is good because remember, before today, this is still, they've never sold anything. They've never sold any products or service or anything, but they have a lot of cash. They legit have 500 mil of cash and no debt. So I'm curious to see what'll happen. I don't know if I'd buy them at all-time highs though. Hey, what up, Karai 8? How's it going, man? Thoughts on SoFi? Let's look at SoFi. What do you think of AMD right now? I wouldn't buy AMD after its rally, but I'm not really selling my AMD shares either. I haven't trimmed any AMD shares since its 25% rally yesterday. Here's another stock that I think is, so we've looked at a lot of momentum stocks. We looked at Rich Tech. We looked at, we've looked at a lot of momentum stocks, but this is a company that has been momentuming up to all-time highs, but for a good reason. And that's because they have good growing fundamentals, and it justifies the stock price appreciation, in my opinion. Like if we go to their financial services right here, this is the real growth for their company. Like the revenue's up 105 after it grew 80, after it grew 222, after it grew 80. So the growth is insane on their financial services. Also, their lending revenue's up 30% to a new record as well. So the business is super growthy. They're beating on the analyst expectations. That's usually a good reason for why a stock gapped up on earnings. Go check what the analysts expected versus what they reported. And as we can see, every quarter for the past year, they've beat on expectations on revenue. They beat on EPS, which is net income expectations, and on EBITDA expectations every quarter by a good margin. So that's why I think people are really taking SoFi serious. They did 850 mil of revenue, and out of that, 100 million of it was after-tax net income. Like they're making net income every quarter. So I really love SoFi. Again, I'm totally biased because I own them, and I regret every share I've ever sold in them, but I love them. Hey, Edgar, what up, man? He said Meta stock. Yeah, dude, let's do it. That app isn't supported here in Asia. Oh no, that sucks, man. I wish I could help you out there. So anyway, here's Meta right here. This is a stock we've all heard of before. They own Instagram, Facebook, Threads. Threads now has the same amount of daily active users as X does, which is crazy. They own WhatsApp as well. They also just introduced ads to WhatsApp, which is a nice earnings tailwind. Has anyone seen the new Meta Ray-Ban glasses, like with the wrist band that you can control it? It looks pretty cool. But anyway, check this active users here. Meta has 3.48 billion daily active users, pretty insane. And they print money as well, basically 15 to 20 billion in net income a quarter. It's growing insanely. Net income's up 36 after it grew 72. This is a $2 trillion company with 40% net margins. They're printing money. They're deleveraging. They're investing in AI. They just bought Scale AI for 15 billion. This is how Mark Zuckerberg is so rich. He owns 13.6% of a $1.8 trillion company. And here's again why I think Meta could go higher. I mean, they're only trading at 25 times net income or PE. I think it could go to like a 28. Send this to $800. Happy Tuesday. Hey, you too, Robert. What platform are you working on? Oh yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a software where you buy stocks on. What's your PL? Well, here today my profit and losses, we're down, well, it depends on the portfolio, but we're down 0.69% in this account. But all time we're up 9,500 in the middle there. Thoughts on Target? All right, we'll look at Target. So we gotta look at CoreWeave too. So the thing with Target is they are being hurt a lot more than your average grocery store. You look at Walmart stock, you look at Costco, they're doing really good. But Target, on the other hand, isn't because they sell more discretionary items. Food and beverage is only 22% of the revenue. Then they're in the more discretionary stuff like household essentials, apparel, accessories, home furniture, decorations, beauty products. So a lot of the more discretionary items than just groceries. So it hasn't been as recession resilient with how hurt the consumer is. Also, they lost their growth. The revenue's negative year over year. Revenue's down 1%, add inflation to that. That's not great. And if you go to the net income's down by 21. But the reason you buy the stock is for the dividend, and the dividend is safe. You get a 5% yield, and the payout ratio is a 50%. But again, it's a low margin business. They're kind of being out innovated. Like they don't have an online presence, kind of like, or a delivery presence like Walmart and Amazon does. Like anything you can get at Target, I'm pretty sure you can just get on Amazon or I don't know about Walmart, but hey, Isaiah, dude, with the paper crane. No way, my friend. You say, can we look at ADP? Yeah, for sure, dude. What's the app? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. But here's automatic data processing. This is a nice dividend growth company from what I remember. Like even if you buy the stock right now, you still get an over 2% yield. And look at the dividend growth. In 2021, it was $3.70. Now it's over $6. So that's really impressive. And the payout ratio looks safe. They're trading at 29 PE. Their employer services. Yeah, nice. It was at a new record for the fiscal year 2025. Professional revenue also at a new record for the year. That's good news. And look at this net income. That's actually insane. They're easily making, if you average it out here, over $1 billion in net income every quarter. So they're making $1 billion in net income a quarter, and the dividend cost $625 million. So since they have so much leftover money, they're literally spending a couple $100 million on share buybacks as well. This is such a shareholder-friendly company. So not only do you get a 2% dividend, but the net income's up by 9.8, but net income per share is up by over 10. So again, you get the 2% yield, the 2% share buybacks. Anyway, seems like a shareholder-friendly company. All right, CoreWeave. Let's see here. Yeah, hey, I'm not sure. I wish I could help you out there. I'm not sure any supported brokerages in Asia. Wish I could help you out there. You should Google one though. What up, TJ? I'm doing good. How about you? But Looney said CoreWeave. Let's do CoreWeave right here because you know who owns CoreWeave is the homie the homie Nvidia stock, because Nvidia owns a bunch of individual stocks like APLD, ARM, and CoreWeave is their largest holding, basically data center play, buying a bunch of Nvidia chips, and Nvidia agreed to buy back the excess capacity. Oh, that's pretty cool. Check that out. CoreWeave acquires Monolith AI. That's actually pretty cool that they're doing some acquisitions. First off, this is a pure growth company at foremost. Like, check out the growth. Like, the revenue went from 400 mil to 1.2 billion. Again, they just IPO'd, so there's not too much history. But that year over year, like last quarter was up 420%, 500%. Like, the growth is insane. So it was a record this quarter. It was 1.2 billion, a record. Check out what the analysts are expecting in 2 quarters. 1.8 billion. Like, the revenue is expected to continue to be growthy. So anyway, Nvidia owns a bunch of them. I wouldn't have it as a huge position, but they're definitely interesting. Maybe put them on the watch list. I do like the growth there, but again, they are losing a bunch of money. Like if you go to the net income, they're burning through a couple $100 million a quarter. But it's not like the analysts don't know this. The analysts actually expect them to continue to lose like $200 million net income a quarter. So anyway, I like them. I wouldn't touch it at this price though. BMY stock. Hey, isn't that Bristol Myers Squibb? So this is that insurance company, and yikes. So this stock is the same price that it was back in 1997, but you're buying this stock to maximize your dividend. Check this out. Let's see. Yeah, a 5.5% dividend yield. Says the payout ratio is negative. Let's see if we can figure that out. Or maybe this isn't an insurance company. Maybe these are like prescriptions they sell, like Eliquis. That's up 7% year over year. Opdivo is up 7. Orsenia is up 1. That's not as much growth as I'd like to see. Like AbbVie with Skyrizi, Eli Lilly with Mounjaro and Zepbound. I maybe like them two more, but it has a crazy dividend. But yeah, look at this. So the revenue, when we combine it, is only up 0.5. And last quarter, it was down by 5. So we do kind of want to see that, you add inflation to the revenue is negative. Revenue only at 0.5 isn't great. And the profits are a little choppy. Oh, yeah, I remember they had, I forget what the news was, but they had some huge lawsuit or something they had to pay out. I don't remember. It literally led to like a huge loss in the S&P 500 on the S&P 500's EPS number because of the huge. But anyway, let's see. So look at this. So they're making 1.5 bill a quarter. Let's see if the dividend is safe. They make 1.5 billion a quarter. Let's say the dividend cost 1.26 billion. So here's bottom line is they need to make more than 1.26 billion in net income every quarter to afford the dividend. And the past 2 quarters they have. So that's good news. Let's see them continue that. Sludgy, what up, dude? He said, I bought PayPal yesterday. Yeah, let's look at PayPal. Oh, what do you think of Denshin Mines? Yo, that's just a gold play. They pretty much just follow gold. Yo, Sam, remind me to look at NU stock. I really want to look at NU. But here's PayPal. This one has been struggling. You know, if you owned PayPal in 2017, you're down on your money. So that's unfortunate. But they traded a commodity multiple, 15 times PE. That's because they're not growing too much, like mid to low single digit sales growth, like revenues up 5% year over year. Last quarter, the revenue's only up 1%. Previous quarter is up only 4%. So we do kind of want to see more growth come to the revenue. And but here's what they're doing, because they're still making over $1 billion in net income a quarter. What are they doing with over $1 billion in net income a quarter? Well, they are just deploying it all right now on share buybacks. I kid you not. This is the one great thing about PayPal. They've bought back 8% of the company. Here's how you can tell. If you look at the net income, it's up 11.7% year over year. But the net income per share is up by 19% because the share part of the ratio went down. Again, the EPS and the net income the growth rate should always be the exact same. And if it's not the exact same, they either diluted you or issued shares, or diluted you or bought back their own shares. And oh, Isaiah, no way. Thanks for the heart there. I really do appreciate that. What did you buy today? I actually haven't bought anything today. I've kind of just been chilling. But yeah, let's look at Coca-Cola. You know who owns Coca-Cola? That would be the homie Warren Buffett right here. So thanks again, Isaiah. You don't have to give any more gifts. I really do appreciate that. But here's Buffett right here. One of his main holdings, Coca-Cola, is 9% of his entire portfolio. This is a company you really buy for the nice, dividend and dividend growth. They raise their dividend every year to keep up with inflation. But yeah, you get 3% of your money back in a dividend every year. And you kind of hope for, here's what you kind of hope for. You want the 3% dividend, and then you're kind of just hoping for like 3% stock price appreciation. I don't expect Coca-Cola to outperform in the long run. Like, I don't expect this to outperform the tech-heavy S&P 500. So I wouldn't buy this if I was like 10, 20 years away from retirement, because you want to probably be in more tech stuff. But this is still a solid, like, diversity. Like, I own some stocks like that. Like, I know McDonald's isn't the best 10-year hold, but it's safe. I know it'll easily return 6 to 7% a year. Coca-Cola is similar to that. Coca-Cola is another one that I do think is worth having a bit of your portfolio in, but I wouldn't have it as a meaningful size position. Safe yield. All right. Officially, NEH, thoughts on GRNY stock. Interesting channel. What up, Dan? So let's see here. This is Funstrat Granny Shots. Wait, Funstrat? That's Tom Lee's company. Wait, let's see what it owns. So, these are good holdings. This is actually interesting. So its top holding is Lam Research, then Robinhood, Tesla, Google. I love Palo Alto Networks as a cybersecurity play. Oracle, Caterpillar, CrowdStrike. I love all their top holdings. What's the expense ratio? So 0.75% expense ratio, a little steep, but it's had some very nice appreciation. I do really like its top holdings. Do you do stocks in crypto? No, I actually don't own any crypto. We don't really look at crypto on here, but I kind of wish I did own some Bitcoin because you see how good it's doing. So Dylan said Nebius. What up, dude? You know who also in the NVIDIA portfolio, NVIDIA also owns Nebius. It's 4% of their entire portfolio. Again, I wouldn't buy a stock just because NVIDIA owns it. Always go do your own research on it. And let's go do some research on Nebius. And the numbers I see here are very impressive. Like, this is a super growthy company. Like, if you look at the revenue, it went from 15 million to 100 million the most recent quarter. It was 100 mil this quarter, insane new record. Check out what analysts are expecting in 2 quarters. They're expecting the revenue to be at 264 million. So there's so much future growth pricing in, and that's from this huge deal they just got with Microsoft. Microsoft and Nebius signed infrastructure partnership worth up to $19 billion. So that's some great news for Nebius. So anyway, they're still not profitable, but I love the growth there. They also had a deal with yeah, you're right there, Edgar. What app is this, please? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a software where you get stocks on. Do you have to pay to see? No, you don't, Decrypt. This is a free brokerage. It's the lowest fee brokerage in my opinion. Like, I like it more than Robinhood because it's way more useful. And like on Robinhood, this brokerage, I have all these brokerages, but with Robinhood, you have to pay $5 a month to get your 3.75% APY on your idle cash. But with Moomoo, there is no monthly fees, no commissions, no fees at all. If you keep your idle cash in here, you get the 3.85% APY with no fees, with no monthly fees. So it's awesome. That's why I keep my idle cash in here. Anyway, Netflix stock. Yeah. And I love all the cool data you get. Let's go look at Netflix right here. So a cool stat we get from Netflix is their premium subscribers. They have 301 million premium subscribers. And mainly, I like seeing their basically ARPU, their average monthly revenue per paying membership. It's $11.69. So they're making $11.69 per month, but this is a great subscription model. Like, it's so predictable, and they just recently rose prices on their service, and they introduced an ad tier subscription, and it's really improved their margins. So check this out. If we look at the revenue's up by 15%, or basically 16. So revenue's up by 16, but the net income is up by 45. Dude, I kid you not, Netflix was able to grow their margin from 22 to a 28% net margin. So that's incredible margin expansion on Netflix. I really love this company. They're easily making 2 to 3 billion in net income a quarter. Same with FCF, which stands for free cash flow, making over 2 billion of free cash flow a quarter. So Netflix is a good one. No dividend, but also there's some recent boycotts, like Elon Musk was saying some stuff about Netflix and all that. But I do love their fundamentals, but they're expensive. They are expensive. Hey, what up, Josh? Good to see you, man. He says, how's your portfolio doing today? It's actually a mixed bag. This portfolio, our main account is, wow, we're at a new intraday low right now. Hit the like button for me. But we're down 0.9% at a new intraday low. Is the market? Yeah, so that's kind of just following the cues. But this portfolio is down 0.5%. But this portfolio is actually green on the day. We're up 0.71%. So, yeah. Can you look at AT? Whoa, hey, Isaiah for the ice cream bowl. Hey, thanks, man. I don't love AT&T either. It's kind of just like Verizon, another stock that, like, look, AT&T is lower than it was in 1997. You don't really buy this to outperform the market. You're buying this to kind of maximize your income. It's done great the past year, but it kind of just follows this like cyclical up and down swing over time. But look at the yield you get. You get a 4.26% dividend yield. That's really good. That's over 1% of your money back every quarter, just in dividends. I subscribe to you. I love this kind of content. Hey, I appreciate that. Hey, thanks, Steph. So, can you please wait? What's a monthly paying? What up? A monthly paying? I only own one monthly paying dividend stock, and this is I've looked at a lot of the monthly paying dividend stocks: Realty Income, LTC Properties, ADC, the covered call ETFs, and my favorite one is actually Main Street Capital, MAIN. They have really good financials, and they have a 6% monthly paying dividend yield. Not only a 6% monthly paying yield, but they've also had some really good stock price appreciation. They've actually come down a little bit. I'm not up too much. I'm up 3% on my position, but yeah, you get the nice monthly income with that stock. So yeah, I have a REIT in here as well, Iron Mountain. That one has a 3.3% yield, but not monthly paying. Hey, try not to spam there. Hold on there, Purple. We'll try and get to that one. Don't worry. Okay. What do you think about VWA? What's VWA? Wait, is this that? Oh, this is the... I don't know what this is. I think this might just be volatility or something. There's nothing for me to look at here. Yeah, I think that's an index. I wish I'd give you more thoughts on that. Sorry. Okay. Titanium said BKSY. This one's another one that just burns through money, but the momentum's been very nice. Oh yeah, hey. Oh, Zoetis, dude, I love Zoetis. I was thinking about buying them actually. So this is a $1 billion company. They're at a new multi-year high, which is good news. But let's see. Yeah, here's the bad news. Like they burned through a lot of money. They lost 40 mil, 20, like 10. So we kind of want to see them narrow these losses. But like they lost 40 million, all for a business that declined 11% year over year. So it's just sales are down 11. Losing a lot of money, that's they lost 4% of the entire company just this quarter. This is just a momentum play at this point. I wouldn't trust a lot of money in that one. I'd probably swing trade that one. But congrats if you own it. It's done great. So yeah, I'm seeing people say DNN. Again, I wish. Oh no, actually, forgive me. This isn't the gold play. This is the uranium play. So yeah, if you're looking for a uranium stock, here is one that look at this ETF. Actually, let me pull up exactly the URA. They look identical. Hold on here. So ticker symbol URA is the global uranium ETF. Yeah, look how identical this is. So yeah, this is a uranium stock right here, and I believe they might be a startup. But let me check this out. Yeah, if we go to the revenue, 900,000 a quarter. We do want to see this grow, but yeah, they're just following the momentum of all the uranium stocks and the actual commodity of uranium. They do have some uranium assets, I think. Really good balance sheet. Look, no debt on this company. 69 mil of cash, no debt. So I guess that's good. Isaiah, no way, dude. Thoughts on CMCSA? Yo, you're giving me a lot of the communication stocks here. So this is Comcast, another one that's this is probably one of the better ones, but they have this residential and connectivity business that kind of is just going to decline single digits for the rest of the time. But I love this. Like, look, sales are just slowly declining, but they're in a good position where I hope they can really invest in their other businesses, invest in their media businesses. Hold on here. They invest in their media businesses, their studios. They have a theme park, Universal Studios. That's where like Legoland is in Orlando. How's that doing? That revenue's up 18% year over year. But anyway, this business is kind of going to decline for the rest of the time. So that's kind of like a huge head. That's why the multiple is so low here. If we go to the net income, they literally trade at 5 times, or actually it's like 8 times net income because I think they had a one-time adjustment. Yeah. So since they made 11 billion, they actually made around 4 billion, but if we look at the revenue did grow 2%. So their other businesses did lead to a grow in the business, which is good. But again, 2% revenue growth, not too inflation beating. But the best part about this company is the net income and how safe their dividend is. You get a 4% yield, and the payout ratio literally is just a 30%. So very low payout ratio for a good yield. They're making, we'll call it 4 billion in net income a quarter. And they're also doing share buybacks, I think. But yeah, they do 4 billion in net income a quarter. The dividend only costs 1.24 billion. It's at the very top there. So definitely room to raise the dividend, but actually now's a decent time to maybe look at them. SPGI. Oh, hey, Josh. Yeah, let's do it. That's S&P Global, right? So yeah, this app that I'm using right now, this brokerage I'm on, actually gets their data from S&P Global. So check this out. If you look kind of in the very top left, it says data from S&P Global. That's the analyst expectation. This brokerage I'm on, Moomoo, gets their data from them and pays them. But yeah, if you've ever heard of the S&P 500, any ETF with that name has to give S&P Global a royalty for using that name. But check this out. I love how diversified that they are. Market intelligence, credit rating business. This is like a shared oligopoly with Moody's and Fitch. The credit rating business, then commodity insights, indices, mobility, like all these different industries I'd love to see. They're making easily $1 billion in net income every single quarter. Sales are growing. Sales are up 6%. But yeah, billion in net income a quarter. You get a 0.8% dividend yield. I really like S&P Global. It's just a long-term, like buy, never sell stock. Is Moomoo listed? Well, Moomoo is publicly traded. Yeah. What website is this? Yeah, hey, if you want to get this app I'm on, it's software where you buy stocks on. It's in the link tree in my bio, the very first link there. Why you take these beginner? What up, Roop? Let's see what he said here. He said, if you look at EVVTY, you'll be surprised. Let's see what this is. EVVTY. So this stock is an international stock. Let's see. So they're a $15 billion company. Let's go look at their financials. So yeah, they're a European company. So we'll convert their currency from euro to USD. You might get like a weird tax form from them, but let's see. Provisions of solutions for online. Oh, I can't talk about this industry. Online gaming, we'll call it. So do beware. This is in that industry. I can't say it on here because every time I do, I'll get in trouble. But oh, look at this. This here's where the revenue comes from. North America is only 11% of all their sales, so do beware of that. But they're making good money. Here's the truth. When we converted this to net income, they are making good money. A couple $100 million net income a quarter. There's definitely no chance of bankruptcy, and you get a nice yield. Yeah, look at that, a 4.2% dividend yield. So they're making $300 million a quarter. Let's see how much the dividend cost. Dividend cost it actually changes every quarter. It only costs $74 million this quarter. Anywho, they are interesting. Let's say a gaming company. We'll call it. Is there any info on YouTube? Like, wait, hey, I'm not sure what you mean there, Tenzin. Um, let's see. I am your India fan. Hey, what up, Guatam? How's it going? I probably said your name wrong. I'm so sorry. Guatam, how's it going, man? If anyone hits a big, what's up, Mr. Nobody? Name, surname, what's up? CMI, good dividend stock to buy into? Yeah, this is actually one of my more favorite dividend growth companies. This stock right here is ticker symbol CMI, and they're at an all-time high. If you bought this stock right now, even though the stock is at all-time highs, you still get, check this out, you still get a 1.68% dividend, and the payout ratio is only at 25%. They raise their dividend every year. 2020 was $5, now it's $7. Pretty good growth there. And look at the multiple. That's why I think there's still upside. They're trading at 20 times net income. Yeah, they sell like engine parts, like engines, 33% of the revenue, components, power systems. How's that? Power systems, 22% of the revenue. Look at that. It's up 18% after growing 9, after growing 98. So that's seen some nice growth. But yeah, if we go to the net income down here, they're making good money. Easily 500 million to a billion in net income a quarter. And let's, for the fun of it, check the dividend cost. They made 800 mil a quarter. Dividend only cost 250 million. So pretty cool. I don't know. I wouldn't load the boat at all-time highs, but hey, Isaiah, dude. Whoa, with the Isaiah, thank you so much, dude. You said ABBV. This is a perfect, honestly, this is a dividend growth company that has a high yield and will still keep up with the stock price appreciation. Like out of all the companies that have like a near 3% dividend, this has to be one of my like top 5 favorite dividend growth companies of all time. They're super growthy. I'll share with you this right here. If you're wondering what does AbbVie do, well, they sell a bunch of different prescriptions. Like if you've heard of Skyrizi before, they own that. And check out the growth on Skyrizi. Like this is crazy. Revenue's up 62, after it grew 44, after it grew 45, after it grew 70. Like it just hits a new record every year, every quarter. And this is just like they created this in 2019, it's 300 mil. Now it's 12 billion a year for them. So that's just one product they have. They also have Rinvoq, and look at that one. It's up 41 after 55, after 55, after 55. I mean, it's insane. So anyway, this is a really good growth company. After their Botox acquisitions and stuff, that like again, just good growthy company that also has a good growing dividend. So you don't look at the PE ratio. They had a little one-time adjustment this one quarter from a lawsuit payout. But anyway, I really like AbbVie. Okay. Good Time said BOAT. Is that a stock right there? This is Sonic Share Global Shipping ETF. So it probably owns like Zim, GSL. Let's see. Oh, well, actually it doesn't. But anyway, it looks like this is an ETF that owns a bunch of shipping companies, but most of these are like from other countries. Like, well, look at this one right here. Its top holding is SITC. It's a Hong Kong shipping company. And they're making good money right now. Jeez. But Frontline FRO, there's one. What's the yield? Usually these have really high dividend yields. So yeah, I bet this ETF, let's go to it right here. The ETF has a 13% dividend yield. That's pretty crazy. So to be honest with you, you kind of buy that to maximize your income. I don't love that industry. Oh, let's get back to Zoetis really quick. And wait, thoughts on S? Yo, we'll look at S too. So this is Zoetis right here. This is your animal healthcare play that's finally getting to a good valuation. They're trading at 24 times PE. Again, PE is just a net income multiple. They're in parasiticides, and that revenue is growing double digits, to a new record. We can click the annual trend on all these. Parasiticides are at a record. Then they're in vaccines, dermatology. This is for pets. So they're a pet, well, not just pets, but just livestock. Like if you ever look at a cow and you see that like huge, like white circle in its ear, that's to like repel insects and stuff. And it like spreads throughout their body. Anyway, animal healthcare company making really good profits. 700 million net income a quarter. They have a very safe dividend, 1.3% yield, 2% share buybacks. I really like that. Looks like a good time to buy them even right now. What app are you using? Yeah, hey, what up, Preston? If you want to get this app I'm on, it's in the link tree in my bio, the first link there. I do, it's my favorite brokerage right here. Oh, hey, spread the wealth. Bitcoin getting railed today. Probably shouldn't check my account. How is Bitcoin doing? BTC. Yeah, my Robinhood stock is probably tanking. Actually, let me just go over here. Here's our Robinhood portfolio. We are down 1.14% in there. We are down. We're at a new intraday low right now. We're down 0.84% here. Yeah, the whole market's not too happy. Qs are down 0.5 after the Nvidia debacle, like after the Oracle news of Nvidia. So SoFi's doing great though. SoFi's up 5.5. Okay. Let's see. Oh yeah, thoughts on S. I think this is Sentinel One. This stock is at an all-time low because they just can't get profitable. They have nice, good growing top line sales, but they're just losing more and more money, and that's the unfortunate part. So, or I'll just show you that right there. Again, I love the growth here. You know, revenue's up 21 after it grew 33, like very nice growth. But if we go to net income, I think this explains why the stock just has been struggling. I mean, they're burning through a lot of money every quarter. You know, 70 mil a quarter. Well, 200 mil this one quarter. So that's leveraged up their balance sheet. So I basically just want to see this company get way closer to net income positivity, but they're growing nicely. So that's why they're still like worth keeping an eye on and not just completely dismissing, because they do have nice growth. I wonder, yeah. Anyway, we want to see the losses narrow there. CVLT. What is CVLT? This is Calm Vault Systems. Yeah, what up, Isaac? Wow. Congrats if you own this company. That's an all-time high on this one. Let's see. $7 billion company. Looks like they're down 7% on the day, but maybe it's just some momentum. Maybe it's just a little healthy RSI retrace there. Yeah, so they've been beating on expectations like crazy. I can see why they're at all-time highs. Every quarter they're beating on revenue. They beat on net income and on EBITDA. So they're like beating every quarter versus what the analysts are expecting. Yeah, and they're net income positive every quarter. So this is a profitable company, growing their assets. Hey, wonder what industry they're in. Software, AI application software. Interesting. Multiple still looks a little expensive. That's probably why it's having that healthy little downtrend. Hey, Hill, what up, dude? Thanks for the roast there, Hill. I appreciate that. User39 said CRSR. What's this one? Oh, Corsair, bro. Corsair. I thought, yeah. Wait. I do have a Corsair keyboard right now. The keyboard I'm using right now is Corsair. So cool. But would I buy this stock? Probably not. They're only worth $790 million. So $790 million company. They sell like computer hardware, yeah, gaming components and systems. Let me look at this on an annual trend. So yeah, look at this. The revenue's lower than it was in 2019. So what about the other half? Gaming and creator peripherals, again, lower than it was in 2021. So it's just not too growthy. Are they profitable? Yeah. So again, the whole company's worth 700 mil and they lost 20 mil, 10 mil, 50 mil. So yeah, they're just struggling to make real profits and they're losing a good chunk of their market cap every year. So I can see why this one is kind of worth 700 mil. They're just not too growthy as, yeah, and they just can't get profitable. Is it Logitech public? I think Logitech maybe is a better buy. Yeah, Logitech right here. And wow, look at Logitech. They're at an all-time, well, not all-time high, but new multi-year high right now. Let's see their numbers. So yeah, gaming, keyboards. So if you're looking for a company that's pretty much does the same thing as Corsair, maybe go up your quality a little bit. Go with Logitech stock. This one actually makes 100 to 200 million of real net income every quarter. So hopefully that was helpful. You know, I found, so it's, KTOS Kratos. This is your government contract play. They just negotiated higher prices with the government. So this stock has been on fire. They're super expensive right here. Would I buy it at all-time highs? Certainly not, but do they deserve to be at all-time highs? Probably. Well, not this expensive, but they do deserve a crazy premium. Because check this out, the Kratos Government Solutions, that's up 30% year over year. And that was a huge beat versus the analyst expectations. If we go to the orange line, which is what the analysts expected, analysts expected 305 mil and they reported 351 mil. Like that's a monster beat on the expectations. And that's what usually if you just look at what they report versus what the analyst expectations were, it explains why the stock gaps up so much on earnings. And they're also profitable every quarter, making a couple mil, but the net income multiple is ridiculous. But I do like the growth on them. Would I buy them here? Certainly not, but worth putting on the watch list? Yeah, because they're on my watch list, but I want to see a way lower price. I think they're also a drone play. They sell drones, but that's like 25% of the business. Thoughts on JEPQ? Yeah, JEPQ, this is your covered call ETF. They sell covered calls on the NASDAQ. And again, the NASDAQ is way at a new all-time high since, the February high. And this one isn't at a new all-time high. Again, that's because they sell covered calls. You don't expect this to you don't buy this and expect to outperform, but you buy it to maximize your income because you get a monthly paying dividend that's a 10% yield. When you sell calls on the NASDAQ 100, which statistically it's going to get called, which is why the premium is so high. That's how the yield is so high. But if you're 10 years away from retirement, you'd probably want to rather buy the NASDAQ 100, but that's great to maximize your income. It's one of the better covered call ETFs. I'd stay away from, it's definitely better than the Yield Max and the Title Trust is. That JPQ is probably in my top 5 favorite covered call ETFs if I had to pick one. Intel, hey, try not to spam there. Yeah, let's look at Intel right here. So we wouldn't really even be talking about Intel if it weren't for the government taking a stake. So and Nvidia. So that's what's pretty cool. Nvidia and the government took a stake into Intel. And basically, if you didn't know, Nvidia just designs their chips, but they're all actually manufactured in Taiwan by Taiwan Semiconductor, 6 feet away from China. The escalating tensions with tariffs and everything, we need to be more independent with our manufacturing. So that's why NVIDIA is now moving some of their older series production, like the 1080 GTX series, over to Intel in the US and some of their CPUs or whatever. But so they really basically saved the company from bankruptcy. This company would have, high probability, just kept on going lower to zero if it weren't for this basically stake from the government. Because if you look at their net income, there's no point looking at their numbers because the sentiment has changed, but the numbers are terrible. They're burning through billions of free cash flow every quarter. They're burning through legit billions in net income every quarter, and they're losing market share. And also there's speculation that Apple might take a stake in Intel as well, because Apple promised to invest was it $300 billion into the US? One way they can do it is by investing into Intel. Kind of cool. Would I buy it here though? Probably not, but they're interesting. Hood is flat. Let me actually, back to the, let me actually check down here. Here's my Robinhood portfolio. Yeah, Robinhood is actually that's good. It was down earlier today. SoFi is having a great day, but Qs are down a bit. Yeah, the only stock green in here is McDonald's. My only green stock is McDonald's. So yeah, the market's having a rough day when the defensive stocks are up, like the grocery stores and the insurance companies. Do you trade crypto? I actually do not trade crypto. We don't really look at crypto on here. I don't own any crypto at all, and I kind of regret that because Bitcoin's doing amazing. Well, not today, but it has been. Hey, Hill, thanks for that latte there. I appreciate that. How much do you think RR will drop? I'm trying to invest long term. Jaden, I wouldn't wait for Rich Tech Robotics to drop to get into this company, because I just wouldn't ever want to get into this company unless I see things really change around. Like, based off their current numbers and based off what analysts are expecting for the next 6 months, and I just don't see any value of buying and holding this one for the long run. Like, again, Rich Tech Robotics is a startup. If we go to, they have no IP or patents or anything. If we go to their revenue right here, I mean, the revenue's down 18% year over year, and the revenue is only $1 million. So it's tough to really trust this name, but again, it's momentum right now. And right now is the market to be in momentum names with, Q's doing so well, but not a great buy and never sell kind of stock. And I wouldn't have FOMO for that stock. I wouldn't have a fear of missing out, because you're just missing out on momentum. You're not missing out on some probably great long-term performer like Nvidia or something. No, again, none of this is financial advice. I'm not an expert. By the way, I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. None of that. So I'm just having fun over here, give my opinion. Hey, if you do want to support me, though, the best way to support me is just subscribe to my YouTube channel. I'm trying to build up my my viewers on there. I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But anyway, here's Oracle right here. Yeah, Oracle is down 3% on the day. Ever since earnings, they reported earnings today and they've been down ever since, but earnings were really good, or the guidance was, they're opening up 27 new data centers. Their billings backlog grew by 300%. It was crazy. But let me actually check out the news today. So Oracle and Druid Software secured NATO contract. Oracle sets $950,000 base salary for new CEOs and CFOs. Okay. Anyway, basically, Oracle came out and said today that they're losing money on their NVIDIA chips or something like that. Let me see if I can find that. Oh, dude, how far do I have to go back? Well, basically, Oracle said, yeah, right here. Oracle lost nearly $100 million from rentals on Blackwell chips in the most recent quarter. So, yeah, you're right. Hey, thanks for that, Vin. You're right. But anyway, a lot of people like Oracle as a huge cloud play. They also own they store the data now for the TikTok US app. But check this out. Yeah, their cloud and software is at 86% of the revenue, and they make good money. You know, 3.5 billion in net income a quarter, which is good. Again, this quarter wasn't great. The net income declined, but it was the future guidance that sent the stock up. You also get a nice yield of 0.6% yield, but I don't love that they, they actually have a really high payout ratio, and they have a lot of debt too. Um, just subbed you on YouTube. Hey, thanks so much, Edgar. I really do appreciate that, my friend. Someone said SOUN, Soundhound AI. So yeah, this stock, if you own this one, there's really one thing you want to look at for this stock, and that's their subscription revenue. And it's been blowing up. They have like this audio subscription. Check this out. That's 75% of the revenue. And check out the growth here. I mean, in 2023, it was a big nothing burger, you know, 200,000, 400,000 of revenue a quarter. But look at the growth recently. It's 32 million the most recent quarter, up 780% after it grew another 800%. So the growth has just been insane, you know, beating on expectations like crazy. You know, analysts expected 32 mil. Well, they reported 42 mil. Again, I haven't done too much research on them. I don't know if they have a moat or anything, but analysts are just happy with this unexpected growth. You know, sales are up 3x after it already grew 50% after it grew 20. So they are still losing net income every quarter, you know, 40 to 50 mil. Do watch the losses, but analysts are happy with that growth. Romero said ISRG. Yeah, this is a cool medical device company. They make like those like radiation scanners, X-ray machines, and they service them as well. I feel like they're just coming back down to a more realistic multiple, because right now, if we look at their PE, they still trade at 61 times net income, but this company totally deserves a high premium. They're so quality. If we look at their main business, their instruments and accessories, like check out how growthy it is. It's up 18 after it grew 18 after it grew 20. So the revenue is extremely growthy, just hits a new record every quarter, every year. They also service these machines. So if we go to their services revenue, check this out. It's also at a new record right now, up 24% after it grew 10, after it grew 15. So really growthy there. It's a pure growth name, beating on expectations every quarter. Check out the net income they make. Now, this is insane. 700 mil of net income a quarter pretty much, and it's going to continue to grow. So ISRG is a beast, but I think that it's just coming back down to a more realistic PE, you know, 61 times net income. This is on my never sell watch list. I really want to see them. What's your 5-year return? Well, I actually haven't even been investing for 5 years, but like this portfolio is only like not even that old, like just over a year old. I created this portfolio exactly on June 22nd, or in June 2023 is when I made this portfolio. Yeah, look at this. When I started this portfolio, it was only $160, and then all these blue things are deposits, and I slowly, as your money compounds at 8% a year with the market, and you deposit money, you know, your net assets just rocket up higher. Pretty cool. I have other portfolios though, of course, too. Like this portfolio all time, we're only up 18%. We've actually had this portfolio since like 2021. So this one is my oldest portfolio. Definitely underperformed. Hey, Jeff Matt, good to see you, man. Hey, thanks for joining the Discord too. He said, wait. Oh, Prime said SMCI. You know, I actually do own Super Microcomputer. I don't love this one at its current valuation. I do own shares. But would I buy it today? No. Here's why. Because they're seeing a lot of increased competition from like Dell, but they get direct shout-outs from AMD and NVIDIA for installing their chips so good. But check this out right here. If we look at the revenue is growing great. The revenue's up 7.5, but here's the bad news. Revenue's up 7.5, but the net income is down by 35. What does that mean in English? Basically, that means the margins are collapsing. Again, they just sell a commodity, but net margins fell 38% after it fell 38% after it fell 25%. So margins literally have fallen 50% plus from peak. So that's what I'm scared of, and that's why I'm being careful. I'm not adding any more, especially at this price. I think they're probably going to go lower, maybe back to $45. That's where I'd probably look to buy it, around the $40 level to add more. But they do have the 10 billion data vault deal with the new AI, you know, Oracle, OpenAI, buying a bunch of NVIDIA and AMD chips. You know, that's good for Supermicro. How many portfolios do you have? Too many. I got 4 different portfolios here. You know, I got the Webull account, but 2, I have my dividend only account, my Roth IRA, and then my never sell account. GO stock. Well, then we'll look at Nike. You know, I don't love. Hey, what up, Pierce, he said OMC. Remind me to look at OMC. Yo, check out UiPath I got in the other day. Yo, UiPath is, I don't, I'm trying to get out of this stock, but they have had some super, even after its 25% rally this month, we're still down 30% on UiPath, but they've had some nice partnerships with Google and OpenAI, UiPath has, but we're down 30% on them. Anyway, here's GO stock grocery outlet. So they're at a close to all-time low, but again, the whole grocery store industry is struggling. I mean, look at Sprouts Farmers Market right now. But let's see here. Non-perishable, perishable. This looks exactly like Sprouts Farmers Market. Revenue's up 5%. And net so they're struggling with profits. Honestly, I would rather buy Sprouts Farmers Market. It offers name brand consumers of fresh products. Yeah, this looks like a competitor to Sprouts Farmers Market, which also I am down 25% on. And I'm actually, right when the stream ends, Jeff Mack, right as the stream ends, I'm going to upload a video where I actually do a huge deep dive on Sprouts Farmers Market. I go over Sprouts Farmers Market and 2 other stocks. Best way to support me, by the way, is just subscribe to my YouTube channel. I'm about to make a video. But yeah, GO, I'd rather buy Sprouts Farmers Market. They're more growth. Sprouts Farmers Market's more growthy too, and they do the exact same thing. And they're also on a huge decline. So I'd rather buy that Sprouts Farmers Market on a decline than GO. Thoughts on DIA? Is that just the Dow Jones? Let's see. Yeah, so this is the Dow 30. So it basically owns just 30 stocks. Wow, Goldman Sachs is the largest holding, then Microsoft, Caterpillar. I think McDonald's is in here. Yeah, look, McDonald's is 4% of this. So actually, this is a nice diversification to like the tech-heavy S&P that still does good. I mean, look at that. It's at an all-time high. So it's a good way to diversify away from the maybe pure, diversify away from the Mag 7, because the Mag 7 is like 30% of your money in a S&P. But look at this, Goldman Sachs, the bank is the largest holding, which is done great. Then Microsoft, then Caterpillar, Home Depot, United Health Group, Visa, Sherwin-Williams, McDonald's. I really like the Dow 30. What are your power plays like electrical? So first off, my switchgear solution play is Powell Industries. As the power loads get bigger, we'll need switchgear solutions. So that's why I picked up Powell Industries. They're also debt-free with over 10% of their market cap, their net cash, trading at 20 times net income. But, actually, wrong portfolio. My main favorite electricity play, like AI electricity play, you guys ready for this, is CEG Constellation Energy. I've looked at all the utility stocks. This is an unregulated utility, so they can capture more upside than like your NextEra Energy, which is literally by government law can't get like 7% or plus returns on their assets. But it's also, those regulated utilities also get guaranteed 7% returns even when their returns are lower. But I like the unregulated utilities for right now, like the PJM and ERCOT auctions, where the price of electricity is rocketing. Constellation Energy is taking advantage, and they have the pricing power because this company right here, you ready for this? I've looked at all the nuclear plays out there. Oklo, SMR, VST, CEG, GE Veranova, out of all the nuclear stocks, this is the best one because this one literally owns 30% of all the U.S. nuclear reactors. Out of all the reactors in the U.S., they own 30% of them. There is no close second. So Vistra Energy's second, but they own 3 versus their 22. But yeah, that's the best, that's my electricity utility play basically. What about food too? Yeah, Eric, I love this stock. And I mean, I'm obsessed with this stock right here. It's worth buying. It's worth nibbling on even right here. I do eventually want this stock as like 5% of my entire portfolio or something. Would I make it 5% of my portfolio today? No, but I would make it maybe 1 or 2% today because the multiple's fair. They're super growthy. Everything about food too I love. You get the yearly special dividend, the growth that I trust my money with them. They're a more, in my opinion, they're a smaller version of Robinhood. Okay. What tech sector companies are a safe bet? Dave, I think the cybersecurity sector is a safe bet for the long run. When you think about AI and hacking, how it's going to get better. That's like if you look at Salesforce right now, you look at Adobe, you look at a lot of the software names, they're all getting crushed right now. But one part I think that's going to be immune is the cybersecurity. Here's the cybersecurity ETF, for example. I like PanW, Palo Alto Networks, CrowdStrike. Those are the 2 best. FTNT is a really good one, Fortinet. But yeah, like Palo Alto Networks, the cybersecurity names I like. ASTS. Hey, what up, Brandon? So ASTS, you're in for a ride. You're in for a rocket ship of a ride if you're in this company for the next 6 months. And here's why. They're anticipating so much future growth. It's certainly not worth buying right now. I think it's pretty much pricing in all the revenue they're about to gain. Because here's what I mean. We look at the revenue right now, they're a startup, it's $1 million a quarter. They do no revenue. Well, we'll call it $1 million, but look at the expectations next quarter. It was $1 million this quarter. Analysts expect it to be $24 million next quarter. Then the quarter after that, $32 million. So be prepared. You're really watching these next two earnings reports to see what they finally report. And they're buying this at all-time highs. It's risky. Definitely. But they're pricing in basically that future growth, kind of like Take-Two is with GTA 6 about to be released. That stock is anticipating all that revenue about to come in. So I would be careful with that one. CCCX stock. I don't know what this is. This is Churchill Capital Corp X. This might be a blank check holding company. Let me go see what this is actually. Yeah, blank check holding company. So it bought an asset. And again, these are always super complicated to look at, and I always just stay away from these, but it just bought something. Highlights quantum opportunity. So it just bought some sort of quantum stock, or it bought a stake into a quantum stock or something like that, and so it's following that momentum. So congrats if you own this one, first of all. I wish I knew what assets they just bought, or I wish I could give you some more thoughts on them. Yeah, they bought something that investors like. Let's see here. Can you do FIG? Wait, why is ARKK down so much? That's the Cathie Wood ETF. Yeah, dude. It's down 2% on the day. But yeah, this one's just been a massive underperformer, ever since 2021. The S&P is way, way, way higher than it was in its 2021 peak. Well, this is still down, like 50% from its peak. It has had a great past couple weeks, though, because of its like Robinhood and Palantir position. Let me actually go see what it owns. Again, an ETF is just a basket of stocks, and here's what it owns. Roku, CRISPR. I don't like that one. Roblox has done all right. Robinhood's done great. Shopify's done amazing, dude. I love Shopify. Palantir's done really good. Let me actually. Instead of that, let me see what her recent moves are. So we can actually see on this app. Yeah, here's Cathie Wood in her ARKK portfolio. We can actually see the exact changes. So new positions, she just bought for the first time in this quarter ever, Bitmine, Bullish, and Circle. And she bought a bunch of crypto names. What'd she decrease? She decreased her positions in, I've never heard of that, DDD. Anyway, yeah, she has a lot of holdings. Anyway, let me stop talking about Cathie Wood. Oh, dude, Shopify is a monster. Kathy being Kathy. Mills, what up, dude? He said NUE stock. Nucor. Let's check this one out right here. So I forget what this company does. Let me go double check. So, this is the steel mill company. So I remember now. I've looked at all the steel stocks, United States Steel, I forget some of the other ones, but this is, out of all the steel stocks, this is like the best one I've seen out there, because those other ones are like losing net income right now. The whole industry, first off, is on a huge, nasty downtrend. There are new tariffs like going to help out and help stimulate our U.S. steel industry. But look at like the revenue, for example, these year-over-year declines. Like, look, the revenue's down 3% after it fell 6%. After it fell 16. So it's just well off its peak. And same with the net income. Net income, easily, they used to make easily $2 billion plus a quarter. Now it's not even $1 billion a quarter. So, but the good news is they're still net income positive, and they're still making money. When if you go to all the other steel names right now, they're all losing money right now. So this is like the financially soundest steel play out of all them all. The most highest quality steel play, 1.61% dividend. And I know there's some bullish like regulation around them, I think. Levi, they're pulling out the next earnings report. I think this is one of the oldest publicly traded stocks of all times. They've been through some other stuff, but are one of the oldest companies out there. So they just make jeans and stuff. They're a $9 billion company. Let's go check them out. So 42% of the revenue is their U.S. market. Let's go to sales. Again, they just sell a commodity. That's why the PE is so like low. But yeah, they sales are up 6% after growing 1%, after falling 9%, after growing 1%. So boring company. I would never expect this stock to outperform, the tech-heavy S&P 500 in the long run, but they've had a great year. Check out the yield as well. You get a 2% yield. Payout ratio 96%. I don't think that's true. That was based off the last full year. Yeah, the net income has really rebounded because it used to be really bad, but now it's more consistent. Like 100 mil a quarter. Let's just average it out. Let's say they make over 100. Let's just say 100 mil a quarter, and the dividend costs 51 million. So as long as they're making over 51 mil a quarter and a good chunk above that, they should be good. They also spent 30 million on buybacks. Interesting. Here's Levi. Do you know of any good guides for beginner investors? No, hey, I don't, Robo. Most streamers would probably plug in their course or something. By the way, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, nothing like that. So if you want to learn, best way to learn, I guess, for me is just watch my videos, watch the streams. But I'm in Europe. Which broker best to trade with? Hey, what up, KT? I actually don't. I'm not from Europe, so I don't even know which ones are available there. I'm pretty sure Robinhood is. Like, this is a good one. Yeah, hey, these are the three brokerages I use. I have three different brokerages, but yeah. By the way, if you want to get any of these brokerages I'm on, they're all in the link tree in my bio. This one's my favorite one right here. This app I'm on right now is my favorite brokerage because it's the lowest fee. I keep my idle cash in here in the middle of my screen because it doesn't cost anything. On Robinhood, you have to pay $5 a month to get your idle cash APY, but not over here. Anyway, charge your phone, I know. Oh yeah, Figma. Let's get back to Figma right here. And I love all the tools this app has. So Figma did just IPO, so we aren't going to be able to see too much history of their financials, but let's go check them out nonetheless. Let's see here. So revenue. So yeah, actually we do get the year-over-year growth rates. That's good. So the revenue grew 41%. The last quarter, it grew 46%. I actually love that growth. Oh, I actually know someone who made a app in the App Store using Figma, and they're profitable. Look at that. They made 30 mil this quarter, 45 million in net income that quarter. This right here was their IPO expense, so kind of ignore the $800 million loss. That technically wasn't real. But yeah, anyway, I actually like Figma. The valuation is still high. Probably shouldn't be worth 28 billion, but they're on my watch list. I do really like that one. Could be competition for Adobe. All right. APLD, please. Hey, you know who owns APLD? That's in the NVIDIA portfolio right here. So if we go to NVIDIA stocks, and yeah, I will get my charger here in a second. Yeah, that's actually their second largest holding. So NVIDIA owns CoreWeave as most of their holdings, but then they own APLD as their second largest holding. This company has benefited tremendously from being owned by AI or being owned by NVIDIA because NVIDIA got them a huge deal with CoreWeave. So CoreWeave went into a huge partnership with APLD. This is another data center hosting company, kind of like CoreWeave. If we go down here, look, 57% of the revenue is their data center hosting, and then the other half is their cloud service business because, their servers are clouds. Anyway, they're interesting. I wouldn't buy them at all-time highs, but they're just following that momentum. Oh, Palantir. Yeah, what's up, IDK? Let's do Palantir right here. I love this stock right here. Too bad the valuation is a little high. Actually, valuation is super expensive on Palantir, but this is a stock I eventually do want to get exposure to, just at a lower valuation. But check this out right here. This is why they probably deserve a high multiple, because they're super growthy. Here's the government revenue. The military, Army, Navy, and a bunch of police stations all use their government software. And check out how growthy it is. Like, it's insane. The growth rate is growing. The revenue's up 49, after it grew 23, after it grew 15. There's no red numbers. It's all green. It's all growth. So insane growth on the government revenue, and on their other half of the business, their commercial side is also at a new record, up 46% after 33% growth. They're beating on expectations every quarter, 33% net margin, highest net margin ever. So they're expanding margins. They literally have no debt. It's a debt-free company. Talk about a fortress balance sheet. $6 billion of cash, up from $4 billion, making interest on their cash every quarter. They certainly deserve a high premium. They're everything investors want, but I can't touch its current valuation. I'd love to get exposure to them though, because that's the kind of stock I want to own. Good growth, margin expansion, debt-free. I have a lot of other stocks like that. Like Powell Industries, debt-free, growing. Comfort Systems, basically no debt. All right. OMC, please. Oh yeah, Pierce, what up, dude? OMC, let's do it right here. So this is Omnicom Group. So unfortunately, this one's done not too well. The stock is the same price that it was back in 2016. So that's not great. They have a nice yield though, a 3.5% dividend yield, a payout ratio of 37%. So that's actually a really good payout ratio. So they must trade at a low PE. Let's see. Yeah, they trade at 11 times PE. Let's see. Are they growing? So this might be why the stock trades at a low multiple, because the sales don't grow, or they grow mid to single digits, like mid single digits. The revenue's up 4. Last quarter, the sales were up 1. Add inflation to that, it's tough. So, and if we go to the net income, it looks like their margins are falling too. Yeah, that wasn't some one-time adjustment either. So look at that. The revenue's up by 4, but the net income fell by 20, and that was real. So that means their margins, slipped from 9 to 7. It's rough. So, but still, they make that explains why the multiple is so low. But still, the dividend is safe. We kind of want to see the growth come back to this company. I think investors. Let me actually go verify that. Yeah, investors have just been. Yeah, they missed on net income numbers by a good chunk. All right. So I don't really expect that to outperform in the long run, but it has a nice yield, and the yield looks safe. We are all owned by AI, or at least I am. Hey, what up? Vital said JBS stock. What is JBS? Oh, I actually have this one on my watch list, and I don't know why. Let's go check out what they do. So, yeah, they've been struggling the past couple weeks here. Beef North America, Pilgrim's Pride, Brazil, Pork United States. So this is one of the pork, chicken, beef producers. And let's see, where does the revenue come from? If you go to market, so 60% of the revenue is North and Central America. So that, I think, that includes Mexico. I think this might be headquartered in Mexico. Let me double check. Where is the company HQ'd at? In the Netherlands. Oh, so this is a company headquartered in the Netherlands. But 60% of their sales come from North America. Then South America is 28% of the sales. Actually, I'm slow. Okay, never mind. So, but good news, they're making good money. Like, this is good. 5 to 700 million net income a quarter. And look at the growth rates. Those are insane year-over-year growth rates. So, they might just be falling because of the commodity. But anyway, you might have to pay a foreign ADR fee. What app is this? Oh, hey, what up, Sester? Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage where you buy stocks. Any stock which gives good dividends? Yeah, here's 2 of my higher yielding plays. Check this out. If we go over to my Roth IRA, Iron Mountain has a 3% dividend, yield, very sustainable. And this is a huge data center play. I really like Iron Mountain, and I'm up 7% on them. And also Main Street Capital. This is a monthly paying dividend stock that, in my opinion, has a sustainable monthly paying dividend. And I'm only up 3.5% on them. Okay. Noam said DPRO. What is Dragonfly? Wow. I think this is Dragonfly Aerospace. The stock had some nice momentum the past couple of days here. Let's go see. Is it momentum, or do they have numbers? So, no, this is a drone company. So look, it says 100% of the revenue is from drones. Oh, but they don't have any sales. Yikes. Look at that. They missed on orange lines what the analysts expected. They've missed on expectations every quarter. So if we go to their sales, you're really paying for a lot of future hope, like a lot of hopium here. $1 million of revenue a quarter, losing a couple mil. Oh, but did they just issue a bunch of shares? So yeah, they beefed up their balance sheet by issuing shares. Anyway, the momentum is strong on this one, but I'd be really careful. I wouldn't have that as a meaningful size position. I would swing trade that one. Jalen said, what app is this? Yeah, hey, by the way, this is a software. It's where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. So, ASML is very expensive stock. Is ASML a buy right now? ASML, yeah, I don't think ASML is a buy right here. That's the cool lithography company that works with ASML, or that works with Nvidia, Samsung, and Intel. But yeah, they're pretty much at an all-time high. They deserve to be up in all-time highs because they had a phenomenal quarter. They like incredible margin expansion. On ASML, the revenue grew 35 and the net income grew by 86. So the record net margin, 35%. It's never even been close to 35% before. So it was a good quarter. And they changed their dividend. Hey, what up, Caden? Good to see you, brother. So I saw someone say Riot, Hive. Oh, so here's the thing with these Bitcoin mining companies. I've looked at all of them out there. I've looked at Marathon, CleanSpark, Hut 8, CoreZ. I've looked at all the Bitcoin mining companies, Riot, like none of them actually ever outperform Bitcoin. So I would always recommend Bitcoin over the Bitcoin mining companies because they just don't outperform. Milan, what up? Said grab stock. Yo, this is a really cool stock. I actually love this one. This is basically international Uber. So, hey, Joey, thanks for the rose there. I appreciate you, Joey. If you got a stock you want me to look at, let me know. But here's Grab Holdings. They do exactly what Uber does, but in all these other countries. Notice the US and Canada aren't on here. 30% Malaysia, 22% Indonesia, 20% Singapore. So I love how internationally diversified that they are. And they grew so much attention that Uber decided to buy the company. This recently happened in the past year. Uber decided to buy 13% of the entire company. So Uber is the largest shareholder, so it's now basically backed by them. This was genius for Uber, gives them instant international diversification. Also, Toyota Motor owns 5.5% of all the shares. So basically just international Uber, and they've been doing great. And Uber is a proven business model, and it's a commodity that everyone needs to, go from A to B or get food delivered to your house, whatever. And I guess, anyway. Let's keep going here. Rich Tech and hey, Rich Tech again. This is a momentum play out of not a great robotics company, just because they're still a startup. They really need to prove themselves. You're paying for a lot of future hopium. Like, look, the revenue is $1 million a quarter, and the revenue is actually down 18% year over year. So, Rich Tech Robotics, like $1 billion company, that does $1 million a quarter, that's declined, that's missing on expectations, and the expectations aren't even good. It's $2 million. So that's a pure momentum play. Don't just buy and hold that one for the long run. Have a plan to get out of that one, in my opinion. Is there a stock that will not drop more than 2%? I mean, yeah, there is one. Ticker symbol, you ready for this? Here's a stock that will never drop 2%. Ticker symbol BILL, the US 1 to 3 week Treasury bill ETF. So yeah, if you never want to lose money, there you go. But you only get 3% returns a year. It's basically guaranteed 3% returns a year. But that's Treasury bills just in an ETF. And again, that ETF, it only looks that way. That's the dividend reinvested chart. Here's what that ETF actually looks like. It doesn't really make you any money, but it won't fall 2%. Okay, AI companies. Hey, I like Google. Had a great day yesterday with AMD. Yo, me too, UZG. I do own AMD here in my growthy portfolio. Here, I'll show you all this. All time, if you look, we're only up 18% all time, so we've definitely underperformed. But yeah, AMD's having another great day. We're up 69% on them. They're up another 3% today. But yeah, I bought 11 shares of AMD at $125 a share, pretty much. So yeah. Hey, Jose said CRDO. This right here is a quality company. Like Rich Tech Robotics is at an all-time high right now because of momentum. Well, this stock is at an all-time highs because of their good growing fundamentals, and it justifies their appreciation. Like, there needs to be a fundamental reason to justify the stock price appreciation for it to be sustained, and this one has it. Like, this is what's insane. No one expected this amount of growth. The revenue's up 273%. After it grew 70, the growth year over year have been insane. And they're not just making revenue, the revenue's not just growthy, but also they're profitable. For the past 3 quarters, the net income they're making is insane, and it just hits a new record every quarter. So this is an insane growth company. And look at this balance sheet. Another huge, it takes a lot of risk off the table. They have no debt at all. Debt-free company. Let's see how much cash, $500 million of cash, up from 400 mil. So everything there fundamentally is headed in the right direction. That's what really justifies and explains that huge stock price appreciation. Plans for tomorrow? If you're talking about stock plans, not much. Don't really plan on buying anything tomorrow unless I see a huge decline. I'm not seeing any amazing deals yet that I don't already have. Like Sprouts Farmers Market, Progressive, I've been buying those, but I'm looking for some good stuff to buy. Hey, I see FTNT here. This is a great cybersecurity name. Let's do it. So if you're looking for a cybersecurity stock, which I think is a software, it's a sector you want to get exposure to. Oh, but going back to Jack, any plans for tomorrow? We will be streaming tomorrow. By the way, if you want to hit the follow button, we stream every single day. We just look at stocks. I sell nothing. I have no course book. Watch out for people impersonating me. I'll never follow you. But here's Fortinet. It's a cybersecurity play that I can absolutely trust. I can get behind this company. Check out this right here. 40% of all the revenue comes from their security subscription. So it's a subscription model. And check out how growthy this is. You know, it's up 15 after going 22, after going 34. The growth is insane. Like that's what you want to see for a tech stock that you plan to never sell, you know, and they're not just making they're not just making revenue every quarter with their subscription, but they're making real after-tax net income. Easily 400 to 500 million net income a quarter. The growth rates are really good as well. So I just love how profitable this company is. When will the AI bubble pop? You know, the thing is there's no catalyst stop in this market. We could be the Ponzi could continue for till the end of the decade. What app are you using? Yeah, hey, by the way, if you want to get this software I'm on, it's where you buy stocks. It's in the link tree in my bio, the very first link there. But you know, we've seen a lot of circular movement. Like here's what happened yesterday. Basically, OpenAI took a 10% stake in AMD. Here's how circular this is. So first off, Nvidia bought 100 billion of OpenAI, and OpenAI now owns 10% of AMD. And OpenAI just bought a bunch of AMD chips, which is sending AMD stock up. So whenever AMD stock goes up, that'll send OpenAI stock up, which will then send NVIDIA stock up. So indirectly, the circle is completed now. NVIDIA stock benefits from AMD stock going up because OpenAI owns it and NVIDIA has a stake in OpenAI. Pretty crazy. I'm going to make a video about that later. But anyway, AMD is one I do own. I'm not really going to trimming my position here, but check this out. You know, they have a 17% PC GPU market share. Obviously, they're getting into data centers. You know, data centers need GPUs and AMD makes their own chips. And hey, they're good enough for OpenAI to use. So that was a huge marketing tool. Great news for AMD. But yeah, they're making a lot of money. If you look at the FCF, which stands for free cash flow, it's at a record 1.8 billion, making a couple hundred million in net income a quarter. No net debt on AMD either. That's a really good balance sheet. So I do like AMD. Would I buy it now though? Is it too late? Yeah, for a meaningful size position, yeah. It wouldn't be worth like putting as a meaningful size position in AMD. Maybe a nibble as like a fun money position, but it's yeah. Champion home. Hey, what's the ticker symbol for Champion? What up, Brick? If that's what you mean. Water will be next expensive in future. Hey, the water goes somewhere. But yeah, actually, a lot of people. This is why I'm actually doing some investing in comfort systems, but it's really unpopular for some people are to do water cooling. So they're actually stopping doing water cooling, and instead they're getting comfort systems to install the HVAC pipes right into the server racks to cool air, and it works great. Saves on water, and it's good for they make the offsite huge HVACs. So heating, ventilation, air conditioning, there's comfort systems for you. Like I love buying the whole AI ecosystem beneficiaries. Like first off, I own the chip plays AMD, but then I own the whole ecosystem like SMCI to the people who install your Blackwells and your AMD chips for you, to the P6, to the people that power your whole data center with clean energy via nuclear. I own the company that owns the most amount of nuclear reactors in the world. They own 30% of all the US nuclear reactors, largest pure play. And I own the switchgear components that the utilities will need for the heavy electricity loads, Powell Industries. So in the silicone electronic plating cleaners too. Anyway, let's keep going here. TTD, this is the trade desk. This is one that sadly I think might go a little lower. It's a good company. I like this advertising business, but the multiple is still expensive. It's worth putting on the watch list, but here's the tough part. They're trading at 65 times net income, and this isn't like propped up on some adjustment. Like they're really trading this expensive, 65 times PE. Here's the tough part. If we look at the revenue's up 18% year over year. That's good growth. Revenue's up 18%. But the net income is only up by 6% year over year. So their net margin fell by 11% year over year. There's some bad news. By the way, Netflix used to be a customer. Netflix used to use the trade desk to find advertisers for their new ad tier subscription. Now that Netflix went over, they're seeing a lot of increased competition from Roku and Amazon. And so Netflix switched over to Roku and Amazon. But still, I think this is still worth putting on the watch list. It's still a good company. They're still making a bunch of net income every quarter, but the multiple is too expensive. What is hey, try not to spam there. Hold up here. Um, yeah, if you got a stock you want me to look at, let me know what the ticker symbol. Sorry, I'm gonna have to. EL, is that a bad stock? Well, yeah. Well, here's the thing. They deserve to be at this all-time low price right now. And like when we look at their fundamentals, it totally makes sense. A lot of the beauty stocks have been, struggling, and that's because their organic sales growth are down by 13%. Organic sales growth down 13. That's not good. But yeah, this is skincare is. Look at the decline of the skincare revenue the past 4 years. It's just straight down. The makeup sales. Look at that. See, I can totally understand. Maybe they're just getting their market share taken away from maybe by like an Elf Beauty or something. But yeah, it just looks like the revenue. Yeah, revenue's down 12. And look at this net income. This is tough. Burning through a couple hundred. At least they made net income last quarter, but these year-over-year declines are tough, man. So I can totally understand why this stock has been struggling. But maybe, Michael Burry, I think, bought this stock. I think it's like one of the only stocks he owns. But maybe they're rallying up because maybe the worst is over. But I'm just not interested in that stock. Any long-term stocks other than ETF? Can you invest and forget about it? Yeah. Hey, you know what? First off, some of the Mag 7 is like that. Like I think Google is just a buy and never sell stock. Meta. But one of the safest stock I almost trust like more than Google is just McDonald's. Perfect buy and never sell stock. AbbVie is another one. ABBV. And McDonald's 2.3% dividend. AbbVie 2.5% dividend. Those are nice. Look, dang, we're at a new intraday low right now. Hey, drop a like on the stream for me if you want to help me out. By the way, I sell nothing. I have no course book. Watch out for people impersonating me. I'll never follow you. Yeah, if you want to the follow button, we stream every day. And I like being fully transparent. Someone said, Chance said UiPath, that's one of my biggest losers. We are down 30% on them, and they're up 25% this month, and we're still down 30% on them. So UiPath, I'm kind of actively trying to get out of, but there's been a lot of good momentum around that name. Actually, I'll share with you the news right here. They partnered with Gemini and OpenAI. Let me pull it up. So, so UiPath announced strategic partnerships with NVIDIA, OpenAI, Google, and Snowflake. So, they partnered with Gemini Audio. So anyway, I've been in this stock for a long time. Like back here, if you're wondering what happened, the CEO literally this day quit out of nowhere. It was literally a cash grab. Like he took his money and dipped. It was a bad look. This was like your original AI play, but they're really being out innovated. And I don't know if they have a moat. I'm still doing research on them, but the sentiment's good around the name, but I would not have UiPath as a huge position. And I'm saying that as a shareholder. Look at this. You want to see something sad? Look, these are all my buy orders. I was buying this stock in 2021 at, $50 a share, 52, 57. So I've been a bag holder on that one. Maybe I'm just salty, but anyway. But I do also, I haven't fully sold out of them because I deemed them too cheap to sell. Because they have so much net cash. I think literally like 30% of their market cap is just their cash on hand. What platform? Yeah, what up, Casey? I'm not sure what platform you're talking about here. If you want to get any of the apps I'm on, they're all in the link tree in my bio. This one right here is my favorite one. Best useful one, lowest fee brokerage. Link tree in bio, very first link there. So what was that ETF? Oh, SHLD. I think that's the Global Defense ETF. So yeah. If you look at the aerospace and defense names, they're all pretty much at all-time high right now. Like that's a great industry to have exposure to. And if you don't know which one to pick, like, hey, do I buy GE Aerospace? Do I buy Lockheed Martin? Do I buy Raytheon? Well, you can just buy this ETF and it just breaks your money up for you into all of the different defense names. So yeah, Palantir is a big defense name. If you didn't know, if you go to Palantir right here, literally 55% of all the revenue just comes from the government. But yeah, Rheinmetall, Raytheon, BAE, nice aerospace and defense play. What up? Sayster said FLNC. What is FLNC? Let's see. Fluence Energy. So this is, I don't think they're American, but let's go check out what they do. So this is revenue from energy storage products and solutions. So they're an energy storage business, kind of like a Pure Storage, PSTG. The numbers look a little choppy here. Like it was up. Like if we look at this quarter, the revenue's up 24, but last quarter it was down 30. Last quarter it was down 48. Let me check the analyst expectations. So they missed on revenue, beat on net income, and beat on EBITDA. So it's like a mixed bag there. Yeah, it's a bit of the net income's a little choppy as well. So I can kind of see why this one is the same price that it was back in 2022 because the numbers are still a little choppy. We kind of want to see this be more consistent, but I don't know. I wish I give you more thoughts on them. Let's see. Where are they headquartered in? Oh, they're headquartered in America. Hmm. Utilities, solid state battery. But yeah, we can see like the actual industry chain that they're actually in. Anyway, energy storage. All right. Well, hopefully that was helpful. Sorry. Best ETF to have now. Yo, my favorite ETF is first off VOO. It's just the S&P 500. That should be the backbone of your portfolio, or at least you should own a lot of the stocks in the S&P 500 because they're worth owning. Like you need to own at least one of the Mag 7, like Amazon, Apple, Microsoft, Meta. Like you can't not own those. These are must owns if you're in stocks. You can't like not have exposure to these. But yeah. QQQM is like my probably top pick. QQQM is the NASDAQ 100. I think it'll CAGR a little bit higher than the S&P. S&P CAGRs at like 8% a year. This one I think will probably do like 10%. It's a bit more tech heavy, so it does fall more than the market, but it does better. Its top holding is NVIDIA, then Microsoft, Apple, then Broadcom, Amazon, Tesla, Meta, Google, Netflix. I would happily own all of its holdings. So yeah, except Tesla right now, but yeah, dude, my phone is on 7. Yo, we got to hustle here. Where do you find stocks to research? I don't know, Bruno. I kind of just come across them. Sometimes if I like if I click a random stock, like here's how I found some companies. Like I go to Powell Industries right here, random stock. You probably never heard of them before, but you go to company and then you scroll down. You can actually see what ETFs make up this, or what ETFs hold this stock. Like the ticker symbol VOLT, the VOLT ETF, Volt. 5.7% of the ETF is in Powell Industries. And then I look at what other stocks are in this ETF. Oh, wow. It owns ETR, Intergy. It also owns Amphenol Group. I love Amphenol. And I kind of just like, oh, I've never heard of the Itron, Itron. Like, and then I'll maybe go do some research on it. I also just come across stocks from like articles and YouTube videos, wherever. And honestly, I learned about a lot of stocks from you guys telling me this. I've never heard. Someone told me one day a long time ago, someone said, hey, check out Innodata stock. I never heard of it before. I analyzed Innodata. I'm like, wow, this is a company with amazing fundamentals. And then after someone told me about it, I bought them. Anyway. Hey, the Sofa. I don't know about any of those ETFs. Toll Brothers, I'm down big today. Hey, didn't Warren Buffett just buy Toll Brothers? Let me go verify that. And here's how you can check. You just go to the Buffett portfolio and increase position. Oh, he bought Lennar. Oh, Lennar and wait. Lennar and Toll Brothers are the same thing. They're both home builders. Anyway, the home builders, Warren Buffett is betting on the interest rate sensitive stocks right now. So maybe he sees something. But yeah, this is Toll Brothers. They're a home builder, and the home builders trade at really low multiples, and you get really high dividends with low payout ratios and insane share buyback. So if you go to the yield here, look, you get a 0.7% dividend yield, but look at the payout ratio. It's a 6%. Like just for comparison, if you look at Apple or Microsoft, this has a higher yield than Microsoft and a third of the payout ratio. I can't stress how crazy the payout ratio being 6% is for a 0.7% dividend yield. But yeah, they're a home builder, super cyclical, super interest rate sensitive, and that's why their numbers right now don't look good. If you go to the revenue, revenue's up 7, but last quarter it was down 3, then it was down 4. And if you go to the net income, this is really good. They're making a couple $100 million net income a quarter. This quarter they made 360. Actually, look at this. The net income fell by 1.33, but guess what? Because of the share buyback, this is the crazy part. So the net income fell by 1.33, but the net income per share actually grew by 3.6% because there's 4 to 5% less shares that exist from the previous year. And you get the dividend. So you get 4% buybacks, near 1% in dividends. Someone said BURU. Please don't buy BURU. That is the worst. I kid you not, probably the worst fundamentals company I've ever seen in my life. Or maybe I should just show you. Look, if you're looking for I don't know who's buying this, but oh wow, look, they're up 66% on the day. But here's the thing. Congrats if you own this one because you're up on your position. I'd maybe try and sell out of this one, but here's why you just can't trust this stock. First off, even after this rally, the whole company's worth $56 million. The company lost $12 million in net income this quarter. So that's 25% of the entire market cap of right now's market cap. Last quarter, they lost 16 million. The quarter before, they lost 11 million. And they're not just losing net income, but the sales are gone. The sales are 9,000, a 97% decline. They basically, they used to have some sales, a couple 100,000, but now it's 9,000. And look at this balance sheet. I mean, it just keeps getting worse. Like they have way more liabilities than they have assets. It just, I wouldn't short this one just because like it'll have this momentum base. Like if someone literally buys $100,000 of the stock, it literally sends it up a lot. And it says Nibiru will subscribe up to 5 million in Orbit's cap. So they took a stake in, I don't know. It's definitely some meme momentum stock that you don't want to trust with a lot of money. Not trying to hate on your stock though. What platform is this or what app? Yeah, hey DQ, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Are you live on any other platforms? If so, how do I find you? Yeah, hey Lord, I am live on TikTok and YouTube right now. The best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube Nathan Robert. I'm streaming on there. If you miss anything, you can replay it. So yeah. By the way, I sell nothing. Yeah, I have no course, book, WhatsApp. I'll never follow you, DM you. I do need to get my phone charger in a minute here. So thoughts on the airline stocks? All the airlines are pretty terrible. There's not an airline that exists out there that has ever outperformed the S&P 500. There's literally companies out there that buy the S&P 500 and remove the airlines and the cruise lines, and they do great and they collect a lot of money. So these get smoked in a recession. The most well-run airline out there out of all the airlines, the best one is DAL, Delta Airlines. But even this one is lower than it was in 2017. Most of them are struggling to get past their 2019 level price. And of course, the S&P 500 is significantly above where it was. Like, what's the American Airlines one? Is it AAL? Oh my goodness, AAL. Yeah, American Airlines. Look at that one. Down 50% plus from its 2019 price. So let me actually see. Let me go to the, is there any airline ETFs out there? Here's one, JETS, the US Global Jets ETF. As you can see, the ETF that literally just owns a basket of airlines, Southwest, Delta, American, United, Air Canada. It's down from 2019. You just don't want exposure to the airlines. You swing trade them because they're cyclical and volatile. It was a nice trade back in, COVID when revenge spending, but, hold on here. George, sorry, man, I gotta mute you. Try not to spam there. I couldn't even, actually, dang, it deleted what ticker he had. Now I can't even see the ticker. Oh, well. Let's see here. You already got Archer or waiting? No, hey, Archer Aviation, that's another startup. Again, if I'm looking for a stock to buy and hold, like to trust, I don't want to buy a startup. Like Archer Aviation, I'll just show you for yourself. Let's check this out right here. If we go to the revenue right here, it says no data because they've never sold anything. They've never sold a product or a service. And if you go to the net income, they're losing a couple $100 million a quarter. So it's just tough. It's so much future hopium you're paying. It's an $8 billion company that does no revenue. And our analysts expecting revenue. I mean, they're expecting $1 million, but it's tough to trust that one. But they do have a lot of, oh my goodness, dude. Oh my, let me block that guy. There we go. Okay. Sorry for all the spam. I need to get moderators. My goodness. They're in all the chats. Okay. Gary, what up? He said BEN stock. Ben, let's do it. This is Franklin Resources. I think this is an oil and gas play, and these oil and gas plays just don't outperform. Like this stock is the same price that it was in 2005, but I'm pretty sure it has a really nice yield. Let me see here. Yeah, look at that, a 5.44% dividend. So you're kind of buying it to maximize your income, but let me verify they're in the oil and gas industry. Oh no, they're an asset manager of an asset manager. Okay. Let's see. Revenue is down by 2% year over year. So that's not great. The revenue is negative year over year. So revenue's down by 3. And yeah, look how choppy this net income is. They used to make very consistent 200 to 300 mil a quarter, but look at it now. They made net income this quarter, but then they lost some. These year over year declines aren't great. I can actually see why this one's, can understand why this one's been struggling. We kind of want to see the growth come back. Sales are negative year over year. And net income looks a little choppy. Hopefully that was helpful. But hopefully the worst is over and then the stock could go up. Is there a low expense ratio and management fee growth ETF other than SHG and VO? Yeah, QQQM. Yeah, QQQM. Is there a gold stock, not gold funds? Well, there's the gold ETF, which isn't a fund, but it's an exchange traded fund. But there's also like RGLD. Vital. OMEX stock. App. Oh yeah. Hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. There's actually a software where you buy stocks on. So yeah. Oh, wait, OMEX. I typed in OME. Oh, here it is. I typed it in wrong. So here's Odyssey Marine Exploration. Let's check it out right here. So very small company. They're worth $140 million. But and if we zoom out, yikes, this stock is lower than it was in 1999. So you bought it in 1999, you're down on your money, but did they sell anything? Yeah, so it's a startup right here. Look at that. The sales were 100,000 and it's down 37% from the previous year. Oh, that's a not good balance sheet either. So, I can understand why this stock is the same price that it was back in 1997. All right, we got our phone charger. There we go. Let me plug this in. All right, our phone is not going to die anymore. Thank goodness. Is AT&T worth buying for the dividend payout ratio? I've always been the thing is, oh, I hit don't trust. Oh, well. The thing is with AT&T is if you're 10 years away from retirement, you don't really want to touch the stock. You don't outperform, the S&P. AT&T stock is the same price that it was back in 1997. So that's good. Or that's not good, but the good part is the yield. You get a 4.2% dividend yield. But again, you buy that for the income for the most part. Nemo said wait, let's try and find this one. KRKNF. I typed in KRKNF. Sadly, I can't find that stock. Winston said Poet. Let's check out Poet right here. Poet Technologies. Yo, the momentum is insane on this one. They're up 23% on the day. Oh, hey, watch out. Hey, watch out for that person in chat there. Hey, well, hold up. By the way, I don't sell anything. I have no course book. I'll never follow you, DM you. I'll never follow you ever. Watch out for people impersonating me. Unless you donate $1 million, I'll follow you, but I'm just kidding. But look, Poet Technology, if you look in the top right, they're a $700 million company. Let's go look at their fundamentals here. Non-recurring engineering. Okay, so they have no sales then. Yikes, let's see. Well, they basically just transitioned from 3,000 of sales to 200,000. So as long as they can keep up that growth, it looks like they're expecting 600,000 in 2 quarters. That's good. Revenue is going to go from 29 to 500 or to 600K. So that might be why the stock is momentuming higher. So be careful with this name. They've grown their assets. They're really right now starting to prove themselves, and you should expect a lot of volatility as they really prove themselves. Yeah, not much revenue. It'd be really careful with that name. But it could do good. AXP, yo, that's it. You know who actually owns AXP stock? That's the homie Warren Buffett. Yeah, hey, Nick, by the way, if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. But one of the stocks Warren Buffett owns, it's his second largest holding under Apple, is AXP, American Express. This is a great dividend growth company. Even if you buy American Express right now, you still get a basically 1% dividend, 0.93. They raise their dividend every year, so that keeps up with inflation. Like how diversified that they are. United States consumer services, commercial services, international card services. How's that doing? International card revenue's up 14, after it grew 9, after it grew 10. So the growth streak continues. They're making good net income, basically $2.5 billion in net income every single quarter. And then they just share some of that with you with dividends and share buybacks. And Buffett owns them, so he sees some value in that name. Yeah, hey, Finn, by the way, if you want to get this app I'm on, this software, it's where you buy stocks on. It's a brokerage. It's in the link tree in my bio, first link there. Can you look at, or what is VWA? Let's look at VWA right here. That is, oh, wait, I don't know what that is actually. Are you talking about Volkswagen, or are you talking about the volatility SPX offer price that I can't see? That's an index. Okay, I can't find that one, I don't think. If I am within 10 years of retirement, why would I not want AT&T? One alternatives. Well, here's the thing. Here's what I meant by it. I said, if you're 10 years away from retirement, I feel like you're doing your future self a disservice if you buy AT&T because you're missing on that real tech compound you get with like the S&P 500. You know, AT&T is the same price that it was back in 1997. You're buying this for, you shouldn't really expect much stock price appreciation. You know, you get the 4% dividend, and then you hope for maybe 1 or 2% stock price appreciation on top of that. But you would want to buy just, more tech stocks, just buy the S&P 500 even. The S&P 500 would be a much extremely better buy over 10 years than AT&T, in my opinion. It diversifies your money up for you into, the tech, NVIDIA, Microsoft, Apple, Broadcom, Amazon, Meta, Google, Netflix, That's kind of what I meant there. Is there any stocks that are going to skyrocket soon? I never get the chance to ride the rocket at all. Sometimes a lot of investors, one thing a lot of investors regret is selling out of great companies for a profit. That's one thing I regret with Robinhood. I regret every share I've ever sold of Robinhood. I regret every share I've ever sold of SoFi because I sold them when I was at 100% gain. I took 100% profit on them. I took a 200% profit on SoFi with most of my shares, and I'm so sad I did that because they just continue to climb higher. So don't trim your flowers and plant weeds, as the saying goes. And hey, Luffy, what up, dude? He said Amphenol Group. Yo, APH stock is one of my hidden gems right here. I would love to buy more, but the valuation's a little high. But again, this company totally deserves to be at all-time highs. This is an S&P 500 company. They've been actually one of the best performing S&P 500 names. This is why they're so growthy. The revenue's up 56% after growing 18. But look at this. The revenue is up 56. And the net income is up 108%. So that means they're expanding their net margin. Their net margin went from 14 to 19. It's never even been 19 before. So record net margin for them. You get a 0.53% dividend yield as well. So yeah. And they also just acquired CommScope, COMM, or they acquired basically 80% of their assets. The good company basically saved them from bankruptcy. Amphenol is a growth beast, and they're a serial acquirer. Hey, George, yo, don't worry about it, man. I really appreciate that. Flare, is there a ticker symbol? If you ever got a stock, I'm gonna give me the ticker symbol, but I'll type it in for you because I appreciate you. I typed in Flare. I can't find that stock. If you give me the ticker symbol, though, I'll check it out for you. Let's see. Let's see. Hey, thanks, Livy. I appreciate that. All right. What's your take on Nebius? Overpriced? All right, so Nebius is overpriced. Oh, wait, Johnny, remind me to look at Progressive. We got to look at Progressive after this. Shout out to the member, Johnny. But if we go to, where was it? Yeah, the NVIDIA portfolio right here. One of the stocks that NVIDIA owns is actually Nebius. They own ARM, APLD, CoreWeave. But Nebius is a really interesting company that just got a huge deal with Microsoft. If we go to the news down here, number one right here, Microsoft and Nebius signed major AI partnership worth $19 billion. So incredible partnership, and that just happened. That's the reason they gapped up on this day. There was no earnings, but there was just that news. They got rallied up, and then they've just been up ever since. So we should almost see a revise to the expectations. We should see these numbers get estimated higher. First off, this is already an insanely growthy company. So if we look at the revenue was 100 million, up from 15 million year over year. Like the growth is insane. And remember, it was 100 million this quarter. Analysts are expecting in 2 quarters, 264 million. So anyway, pure growth company right there. Would I buy them at all-time highs? No. Tough valuation right here. FLR, it's a type of crypto. Oh, sadly, I'm not going to be able to view that then. If that's a crypto, we actually can't view crypto on here. We're mainly just looking at stocks, I mean, there is this crypto, but I don't even know if that would be like available to even look at. That's my bad there. Yeah, we're not going to probably be able to view that stock. If you have a stock you want me to look at, let me know. I'll check it out. Can you drop your link tree again? Yeah, hey, what's up, the TP? I appreciate that. Yeah, hey, by the way, the link tree is also in the description of the stream, but it's in the link tree in my bio. So yeah, let's look at PGR right here. Yeah, thanks, Steven. Let's see here. So Progressive, I'm actually, as soon as this stream ends, by the way, I have a YouTube video I'm waiting to release. I never release the video right before I stream because it does burst. But as soon as the stream ends, I'm making a YouTube video And one of the stocks we go over in that video is Progressive stock. So I'm kind of fresh on the information here. So let me tell you why I love Progressive Corp. First off, they're a good chunk off all-time highs. You look at the S&P, the QQQ, they're at all-time highs right now. It's tough buying them psychologically, but this one, it feels better buying it. And I'm not just recommending this stock because they're off all-time highs. I'm recommending this stock. Again, I'm not really recommending it, not financial advice, of course, but I like this one because of the good fundamentals. I like this one because of the good growing fundamentals. Check this out right here. Hold on here. Hey, sorry if I don't get to your stock there, but try not to spam. Here's the revenue. Check this out right here. This is what's incredible. And hey, George P, I didn't even see that, man. George P, are you still here? Thanks so much for the hat and mustache. I so much appreciate that. But yeah, check out the revenue growth. The revenue on Progressive is up 22, after it grew 18, after it grew 20. Like the growth just continues to hit a record every quarter. And they're not just growing their revenue, but the actual net income, their profits. They had the most profitable quarter ever, over $3 billion in net income, up 100% year over year. And they also pay a yearly special dividend. So if you look, they normally only pay you 10 cents a quarter, but every January, right after Christmas, they do a special dividend. It was $4.50. Last time it was 75 cents. I think it's going to be a new record special dividend because they're the most profitable ever. So fundamentally, I love that one. You get a dividend too. They're an insurance company. That's Progressive stock. Okay, so SLI stock, I think Standard Lithium. Let's see here. So Standard Lithium, this one's probably following the Lithium Americas deal because the government just took a huge stake in the Lithium Americas. Do they have sales? No, so they don't have sales. If you go to the revenue right here, it says 0 because they've never sold anything. But usually, yeah, they have really good balance sheets. 33 million of cash and no debt. So that's interesting. Yeah, they're probably just following all the other rare earth mineral plays. Do you buy any stocks on stream? I do. I do that. But I haven't done that in a little while. Just because it like hides information when I do it, which I'm glad it does. So, hey, what up, Plasma? Good to see you, friend. He said AMAT, Applied Materials. Yeah, this is one of the cheaper chip plays out there. You get a nice dividend too. Yeah, a 0.8% dividend yield on AMAT. That's not too shabby. But they look at this multiple. They trade at 25 times PE. If you look at the industry average, it's at 35. So they're trading at a way lower industry average just because they're a bit of a slower grower. Like they grow single digits. Like if you look at AMD, Nvidia, Broadcom, ARM, they're growing double digits, but these are single digits, 7, 6, 6, 4, 5 year over year. But they're making good money, basically 1 to 2 billion of net income a quarter. They share that with you in a dividend and they do some share buybacks. Check this out. If we look at the net income, it's up by 4.3, but the net income per share is up by 8.3. So you own exactly 4% more of the company than you did a year ago. So you did 4% share buybacks, near 1% dividend yield, pretty shareholder friendly. So, NVR, what was NVR again? NVR Inc. And then, let's see here. IREN been running. Oh, hey, yeah, IREN. That's that CoreWeave competitor. So here's NVR stock. Each share is $7,000. So let's see. Maybe they should do a reverse, but they trade at 16 times net income. What's the industry average? That's because they're a home builder. So that's actually completely, I love the home builder industry, first off. And as we go into a lower interest rate environment, that should really help out this company because home builders are very interest rate sensitive. But check this out. If we go to the net income down here, they're easily making 3 to 500 million in net income a quarter. And they don't pay a dividend. So are they doing share buybacks? Yeah, dude. So net income is down by 16, but net income per share is only down by 10. So they bought back 6% of all the shares. That's what's so great about the home builders. Usually get a good yield at a low payout ratio. They trade at low valuations, and you get insane share buybacks. So it makes up for the cyclicality. IREN. So yeah, this is Iris Energy, kind of like a smaller version of CoreWeave. And if you're ever wondering, why is the stock at all-time highs? Why do they keep going up? It's usually explained in their financials. Oh, wait, there's some news up here. It says, IREN up 8% in pre-market after announcing a multi-year cloud service contract with the leading AI company for NVIDIA Blackwell GPU deployment. That sounds cool, but this is the good part of the company, is how insanely growthy they are. The revenue is 187 million, up from 56 million. That's a 3x increase, and they're not just making revenue, they're not just growing revenue, but they're growing their profits. They're making net income every quarter for the past 3 quarters. So they totally deserve to be at all-time highs, but I wouldn't buy them right now for sure. Thoughts on VTI? Is that just the Vanguard total market? So yeah, this gives, so normally there's just the S&P 500, but this ETF right here also owns companies that aren't American. So think of Nestle, ASML, Taiwan Semiconductor. Those are all in this ETF, which is so cool. And so it's a bit more diversified than just the S&P 500. And you should just get like 7 to 8% a year. Coin, or wait, Honest Company. You think there's going to be a rotate into oil services anytime soon? I don't, oil I think is always worth having as a small portion of your portfolio. You definitely don't want to have like 20% or a good chunk of your portfolio in oil because it doesn't outperform in the long run. It never does, but you buy oil stocks for the yields. First off, you get a 3.5% dividend yield. Oil does good whenever there's war fears, inflation fears, OPEC cuts, whatever. You want to have oil in those environments. And in the meantime, while you're holding it, whenever oil's doing bad, you still get the crazy dividends. So I always think oil is worth having as a small portion of the portfolio, kind of like gold. Gold won't outperform in the long run. Oil probably won't outperform in the long run, but it's worth having a small chunk of your portfolio to have, like the S&P 500 has oil. Show us your positions. Well, hey, by the way, if you want to see all my stocks, I do stock portfolio updates all the time on my YouTube channel. I'm not sure which portfolio you're talking about. I got way too many portfolios. I got 4 different portfolios here, but yeah, if you ever got any questions for me, let me know. I love being fully transparent. I'll share with you my all-time return. I'll share with you how much I'm up and down on every stock, lifetime. I feel like I go to all the other TikTok streams and no one ever does that. So anyway, let's see. Please do Honest Company. And then remind me to look at Coinbase. So I'm going to be honest about the Honest Company. They are a slow grower where, here, I'll just show you. If we go to the revenue, the sales of the company, the lifeblood, the revenue, it only grew by 0.44%. Like that's not great. That actually doesn't beat inflation. Revenue's only up 0.44. That's the one thing I don't love about the Honest Company. They just sell a commodity. 60% of their sales are diapers and wipes. But good news is, they are actually making net income now, which is good because they used to lose a couple mil a quarter, but they are making at least some consistent net income, and they have no net debt. So I just really want to see the growth come back. And if growth comes back to Honest, I really think that one could fly up higher, but I want to see that more growth to the business, the revenue. Like in the content, what's your criteria for buying a certain stock? Basically for checklist. Yeah. Hey, I want it to be one I could trust, a good, fundamentally sound company. All right, so let's see here. Let's look at Coinbase right here. Coinbase is kind of like a crypto proxy. Who actually owns Coinbase is Cathie Wood. So if we go to the Cathie Wood portfolio right here, her third largest holding is actually Coinbase. And, let me actually compare this just for fun. Let's actually compare this literally to the price of, let me just do IBIT. Which is just Bitcoin. So yeah, it somewhat follows Bitcoin. So anyway, here's the thing. If we look at Coinbase's stats right here, this is the good stat. You really want to look at their monthly transacting users. So not just monthly users, but monthly transaction users are at 8.7 million. That's up from 8.2 million the same time last year. So they're growing their monthly transacting users, which is good. On their actual earnings report, they gapped down on earnings because they missed on growth. The revenue only grew 3% from the previous year, but crypto's doing great. So it's following that. What app are you using? Yo, hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. And full disclosure, it is an affiliate link. So if you deposit $100, we'll both get some free stocks. Kind of cool. Love your live stream. Hey, I appreciate that, Sam. Trader said NVO stock, Novo Nordisk. So this is your weight loss prescription play. If you've heard of Ozempic, Elon Musk is on Ozempic. If you've heard of Wegovy, this is the stock that actually owns it. So check this out right here. 93% of the revenue is just from their diabetes and obesity care products. You also get a really nice yield here, an over 3% yield. But one reason they're trading at such a low PE ratio versus the industry average is because they're losing their exclusivity for Ozempic in a couple years. So their GLP-1, whatever, they lose it. Anyone can basically use Ozempic formula in a couple years, which uses saliva from a Komodo dragon lizard. I kid you, I forget exactly, but it's kind of cool. Anyway, the reason the multiple is so low, I think it's mostly priced in though. I actually think they're worth looking into, worth putting on the watch list. They're for right now, the numbers are incredible. They're making $4 billion in net income a quarter. You get a 3% yield here, but anyway. Yeah, hey, I kid you not. Ozempic, its main ingredient is legit saliva from like a Komodo dragon. Um, what should I buy now? Hey, I don't know. Buy the S&P 500. I like Progressive right here. Sprouts Farmers Market looks decent. mRNA, the thing with mRNA is this was your COVID vaccine company, and then the vaccine sales are gone. So the revenue's gone. So, like check this out. If we go back to COVID times, 2021, 2022, they were printing money, 4 to 7 billion a quarter. Insane. But as COVID's gone now, no one takes vaccines, 100 mil this quarter, 100 mil last quarter. Like these year-over-year declines are tough, and not just declining revenue, but they're burning through a lot of money right now. They're losing, a couple 100 million of net income every quarter. So I can totally understand when we look at this stock, I can totally understand why they're on this massive decline, because the fundamentals have massively declined as well. So we're really hoping that the growth can come back. I had to step out. Did you talk about FLR? Oh, hey, George, we actually can't view FLR. I wish I could look at it for you, but I can't really give you any thoughts on them anyway. Because whenever we look at something, I look at their financials, and crypto. That's kind of a cool feature about crypto, though. They don't have to worry about missing on net income or missing on their net margin. It's kind of a catalyst-free asset, which is kind of cool. Someone said, Jessica said CRISPR. I think you're talking about CRISPR Therapeutics. Let me know if that's not right, but that's a Cathie Wood gene splitting company that I actually don't love, just because they still haven't, I'm pretty sure they're still revenue-less. They still haven't proven themselves. So yeah, that's why if we look at the stock right here, they've basically been flat since 2018 because they still haven't gotten to sell anything. If we go down here to the revenue is, you see how it says 36 million of revenue that one quarter? It says 36 million. That was actually from them selling an asset. You go to the cash from investing activities, they sold off 100 million of assets. So that wasn't like them selling a prescription or something and getting that money. They sold off their own assets to get that revenue. But anyway, it's a revenue-less company. We're basically 800,000 of revenue a quarter that loses 100 to 200 million in net income a quarter. That's the tough part. That's the thing that I have trouble trusting. And, luckily they still have a lot of cash on hand. They still have 1.7 billion of cash, but notice, there's cash pile slowly going down, but they have 2 years plus of cash. Like they can burn through cash like this for the next 2 years. And I'm hoping, almost for sure they should finally sell a product in 2 years from now. But I think analysts were wanting them to sell product a long time ago. So anyway, we're basically just waiting for them to actually sell something. All right, Mitsubishi stock. Yo, Emperador, what's the ticker symbol for Mitsubishi? Maybe we can check. That's interesting. I didn't even know they were public. Some said NU stock. Yo, I love NU right here. This right here is a crypto bank out of Brazil with good fundamentals. Check this out right here. Yeah, 92% of all the revenue comes from Brazil. That's where crypto for transactional uses is really popular because the currency isn't good down there, so they use crypto. And NU is the bank that provides that for you. And because it's crypto related, they can charge these really high fees. I kid you not. They have insane margins. But look at this. The net income is literally, the growth every quarter is insane, but they're making 500, 600 million in net income a quarter, and it grows. The revenue grows every quarter. The revenue is up 28 after it grew 52, after it grew 62, after it grew 170. Like they're a beast. So anyway, they're crypto related, but I love them fundamentally. And I believe Berkshire Hathaway, which is Warren Buffett's company, does own a small position in them. Plug C, set it and forget it. Well, here's the thing about Plug Power. It's hard to trust this one because of the money they burn. So again, if you look at the top right, $4.5 billion company. So let's say you buy the whole company. You buy the whole company for $4.5 billion. Here's the asset you just bought. You buy the whole company for $4.5 billion. You're buying a company that burns through money. And again, this is, I believe, an EV charging station company. They just sell electric vehicles, electricity. That's not too profitable of a business. I don't know what net margin, that's a commodity. I don't know what net margin they could really take, especially with Tesla. But anyway, they burned, they lost 200 mil this quarter, 200 mil last quarter, 1.3 billion, 200 mil, 200 mil, 200 mil. Like just for all of eternity, they just burned through net income. It's just not, I lost a lot of money on ChargePoint. I've been there, done that. And usually the kind of stocks that continue to go down are ones that burn net income like this. So just the net income does scare me, but they have seen some. I think the sales were up like 20% or something year over year. Simon said KSS, not Kohl's stock. Yo, never, ever, ever buy this stock. This is something you maybe swing trade. This is Kohl's. That y'all heard of that mall stock or that mall store called Kohl's? This is them publicly traded. It's not some other company named Kohl's. This stock is the same price that it was back in 1997. So these aren't good investments. It's a super low margin industry that got crushed after COVID. Let's see, what are the sales? So sales are look at this. You're not buying them for the fundamentals. The revenue's down 5 after it fell 4, after it fell 5, after it fell 7, after I can totally understand why they're at all-time lows. So if you buy that one, have a plan to get out of it, but you swing trade. So someone said Jedi or GYD said VST Vistra Energy. This is the second best nuclear play out there because they're this out of all the publicly traded companies. They own the second most amount of nuclear reactors. Well, like 3 or 4. But Constellation Energy is a better one. But this one has still done amazing. The momentum on the nuclear names have been insane. This one still has great numbers. I mean, check this out right here. Revenue's up 10 after going 20. So the revenue growth has been very nice. The electricity demand for AI data centers has just been insane. You also get a nice 0.5% dividend yield there too. So yeah, there's Vistra Energy. That company's at all-time highs. To be honest with you, I would rather buy Constellation Energy at all-time highs. How often do you live stream? Hey, what up first? Yo, we actually stream every single day. So if you wanted to follow button, we stream every day. By the way, I sell nothing. I have no course book, no private WhatsApp or Telegram. I sell nothing. I'll never follow you, DM you. Watch out for people impersonating me. Hey, what up, user 390 said Bros. So this is Dutch Bros. They're kind of like a competitor to Starbucks. And I would actually much rather buy this stock than Starbucks right now. And one reason this stock is trending down is just because the whole industry is. They reported good numbers and they went up on that. But the reason they're downtrending isn't based off any bad news from them. It's just the restaurant industry is collapsing right now. Wendy's, is that or I'll just show you that. Look at Wendy's stock right now. Wendy's pretty much all-time low. Wendy's is the same price as they were back in 2004. That's rough. Jack in the Box, ticker symbol Jack. They're the same price as they were back in 2005. Again, the restaurants are struggling. Even Chipotle, look at CMG, Chipotle. They had some bad numbers as well. So it's kind of the whole industry that's being crushed. And I will say, Dutch Bros is a much better buy than Starbucks. Let's go look at them. I actually really like here. Dutch Bros are here in Southern Utah. Oh, hey, cool. I think I've been to a Dutch Bros one time before, and I think it was when I was in Arizona. But check this out. We can see their company-operated shops. So they own most of the shops that you see. And check out how growthy they've been. The sales are up 29 after going 33, after going 37, after going 55. So the growth has been really good, just from same-store sales growth, opening up new stores. But the real thing I love about these franchise models is the franchise fees they collect, which is 9% of their business. This is their high-margin, basically, royalty streams. If you go spend $100 at any Dutch Bros, $5 of it goes back to them through franchising royalty fees. But that's up 19%. So that's also very growthy. They're making good net income every quarter. They're actually growing their margins while Starbucks' margins are collapsing. So yeah, I just like this one for the growth. One of the better ones. Wingstop is also a really interesting one. Like Wingstop, for example, they've also been on a decline, just like the whole industry. But if we look at their revenue, should break this down for me. Yeah, look at this. For Wingstop, 44% of the revenue is the royalty revenue. Basically, you spend $100 at any Wingstop, $5 of it goes back to them as a royalty. Then their advertising fees. McDonald's is the king of this. That's why McDonald's isn't a restaurant. They're a royalty and real estate company. I kid you not. Anyway, do you think AMD will have the next NVIDIA type Palantir run? They already kind of have had that type run, but I don't love the risk reward on AMD right here. I wouldn't be buying AMD here, and I do own AMD, by the way. I love the news that just dropped. AMD is giving up 10% of their company for OpenAI to basically buy a bunch of chips. There's a real argument how circular the industry is right here. We might be in a bubble, but we could rally through the end of the decade very slowly. Check this out. Did you know OpenAI, they're going to, but pretty much we'll just say it ends now. OpenAI owns 10% of AMD. Well, NVIDIA owns 100 billion of OpenAI. So check this out right here. OpenAI buys a bunch of AMD chips. That sends AMD stock up. But since OpenAI owns AMD shares, OpenAI stock goes up because AMD goes up. Well, NVIDIA has a stake in OpenAI. So literally, I kid you not, now NVIDIA stock goes up whenever AMD stock goes up. So the circle's now completed. But yeah, pretty cool. AMD's now like, hey, OpenAI, the best AI company in the world, uses our chips. Everyone buy our stuff. It's a great marketing thing. I'm up $1 million because of AMD. Heck yeah, dude. You deserve it. Dude, I remember for the longest time, AMD was being called Advanced Money Destroyer. Every time I talked about it, it was back down here. AMD Advanced Money Destroyer, but now it's Advanced Money Duplicator. I don't know. Okay. Let's keep going here. Yeah, they've been a nice performer. Figma, another AI company. Yeah, Figma, that's that kind of Adobe competitor. We looked at them just a minute ago. They just IPO'd. Barrick's Gold. So Barrick's Gold, this isn't just basically gold play. And you get a yield. So if you look at this right here, you get a 1.2% dividend yield. So basically, this is a way to get exposure to gold with a dividend. But they have not actually outperformed the actual price of gold, which has done significantly better. Check this out right here. If we compare Barrick's Gold to the actual gold price, the spot price of gold, which is ticker symbol IAU. Let's compare. Well, actually, they've done very similar. From that day. So actually, I stand corrected. Barrick's actually done better than gold. Look at that. Yeah, look at that. It's basically exposure to gold with the yield. All right, so let's see here. What up, Cousins? He says United Healthcare. What the healthcare industry? So yeah, you know who actually just bought United Healthcare? That was the homie Warren Buffett right here. So if you go to Warren Buffett's portfolio and go to his newest position, so that means he's never previously owned the stock before today. He bought UNH, and Warren Buffett doesn't just buy any Joe Schmo stock. It's seen that Warren Buffett really does his due diligence and he really does his research before he buys something. So that's why when it was disclosed he bought shares, the stock rallied up 10% that day. So that's good news. Also, we're kind of unpricing in the huge odds. We're kind of unpricing in the odds of them getting kicked out of Medicare and Medicaid. Because if this company gets accused of fraud, which a while ago, the odds were real because they really did overbill. They overbilled the government, federal government. They were prescribing people those back braces they didn't need. They definitely there's some legal headwinds, but it's being unpriced in right now. We're a customer, we use OptumRx. Check this out. This might be why the government's not too happy with them. Just this one OptumRx business went from 35 bill to, 133 billion. And that's just one business. Anyway, you're watching the expectations again. The net income is supposed to collapse 50%. EPS is going to go from $5.90 to $1.70. The $1.70 won't be able to afford the dividend. But I wouldn't buy here. Certainly wouldn't touch it at 360, but maybe around the 320, I'd maybe nibble. But what app is this? Anyone know? Yeah, hey, by the way, this is where you buy stocks on. It's a brokerage. If you want to get this software I'm on, it's in the link tree in my bio, the very first link there. Webull, or it's Moomoo or Webull. Yeah, hey, I also have Webull as well. Yeah, I'm not sure which brokerage you're talking about. I have Webull, Robinhood, all the apps I'm using are in the link tree in my bio. If you wanted to sign up with my affiliate links. Yeah, they're brokerages where you buy stocks on. This is my favorite one right here. Lowest fee brokerage, most useful analysis. This is the first link in the link tree in my bio. It's called Moomoo. So anyway, is HP stock, is that Hewlett? No, that's HPE. That's Hewlett Packard. So Helmrich and Payne. Unfortunately, this stock has been through some pain because this stock is lower than it was in 2005. So you bought the stock in 2005, you're down on your position, but let's see what they do. North America Solutions, Offshore Solutions. What are they giving solutions to? Oil and gas drilling. So it's an oil and gas stock, so they have a dividend. Yeah, you get a 4.9% dividend. So yeah, look at that. You're basically buying that to maximize your income. Very nice. Ooh, but wait, was this from an adjustment? Was this from an acquisition? Because the revenue grew by 50%. Revenue's up by 50, but the net income went negative. It didn't actually go negative. The operating profit did fall by 53% though. So really watch their profits. I could totally understand why this stock has done terrible. I can see why it's the same price that it was back in 2005. You're kind of buying that to maximize your income for that nice yield. Is there any good stocks I can buy right now? Yo, you'll love the YouTube video I'm about to release after this stream. Good stocks that I'm not just recommending because they're off all-time highs. I like these because they're good growing fundamentals. Sprouts Farmers Market looks really good. I'm down, 25% on them. Progressive stock looks really good. As soon as this stream ends, I'm going to upload a YouTube video on 3 stocks to buy right now, like that are good values to buy right now. How many stock would you hold for a 10K portfolio? Probably like less than 10, probably 10 for a 10K portfolio, maybe 1K in each. You wouldn't really want to have less than 1K in each position because as you deposit more money, you'll have a bunch of insignificant. So yeah, probably 10 or less stocks if I had a 10K portfolio. My biggest positions are gold and AMD. Yo, that's awesome, dude. Hey, both assets have done incredible. Thoughts on SNEX? Let's check it out. So SNEX. So this is Stone X right here. Well, look at that. Oh, the market closes in 1 minute. No way. We've been streaming. Wow. We've been streaming for a long time. So anyway, here's Stone X right here. By the way, if you want to hit the follow button, we stream every single day, sometimes twice a day. I sell nothing. I have no course, book, none of that. So anyway, commercial is most of the revenue. I don't know what they sell. The commercial revenue is up 28 after group 82. Let me guess. So they sell stone. Capital markets. So risk. Let's see. So capital markets, let's check out revenue. So revenue's growing nicely. Yeah, revenue's up 28 after going 80, and their net income positive, basically making 70 million in net income a quarter. So it actually looks pretty good. That's a normal balance sheet. Like the liabilities usually are the same as the assets for these asset managers and bank stocks, so don't worry about that. Anyway, they look good. I can see why they're doing so good. All right. For a 225K portfolio, how much should I be invested? Wait, what? For a 225K portfolio, how much should I be in? Oh, maybe the 255K is in cash or something. I don't know. Surf Air. What's the ticker? Yo, oh my goodness. There we go. Sorry, TikTok said it was AFK. I just had to fill a CAPTCHA. Is this pre-recorded? You're not replying. Yo, hey, sorry. I tried to get to all the comments here. I do apologize. Yeah, what up, Sabbath? If you got a stock you want me to look at, let me know. Surf Air. Yeah, give me the ticker symbol. I don't know what Surf Air is. Can you check out APP? Yeah, what up, user44? So yeah, this is AppLovin, dude. This stock, right? Oh, they're up 7% today. So yesterday they fell after being investigated by the SEC. So yeah, I'll check this out right here. SEC launches investigation into AppLovin's data collection practices. So that's not great, but the stock is up 7% of the day. This is a stock that I would love to buy the dip on, and I would love for them to dip more because I'd love to get exposure to this. This is an incredible growth company. The revenue's up 77. So revenue's up 77. But the net income is up by 164. You won't believe the margins here. You won't believe it. And this is why the stock continued to rally higher and higher. Like that's how the stock went from $9 to $700. It was already incredible margins, 40 to 45% margins, but a 65% net margin. Like gross margins in 90, like this company prints. Free cash flow is insane. Free cash flow is up 70% after going 130. So everything about AppLovin, I love. Can you share your portfolio? Yeah, hey, I've been sharing my portfolio the whole time. Yeah. By the way, if you missed anything, I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, if you missed anything, I can replay it. So yeah, sorry about that, Sabin. Let's check this out right here. This is AMPX, Empress Technology. Check that out. They've been on a nice little rally. So yo, congrats if you own some shares. You got to be up on your position. Let's see what they do. So battery segment. Okay, so the battery sales have exploded. That explains why the stock is at all-time highs. If you're ever wondering why is the stock momentuming higher, usually it's explained by good growing fundamentals. Sometimes not, like you look at Rich Tech Robotics, or some other names, but like an Oklo. But that is some real good growth. Let me actually check out the analyst expectations. So yeah, analysts expected 12 million. They reported 15. And look in 2 quarters, analysts are expecting 20. It's going from 8 to 20. Like the growth is insane over here. So revenue super growthy, and they're narrowing their losses. They narrowed their losses by 50% year over year, deleveraged their balance sheets. So I can totally understand why this one's at all-time highs. Would I buy it at all-time highs? No, but I can understand it. Any more news about Archer and Tesla? Oh yeah, I heard something about that. I don't know what happened exactly. Wow, I just learned what a stock bubble actually. Yeah, what up, Clem? Good to see you, man. SRFM. Let's check it out. So Surf Air Mobility. So let's check it out. This is a very small company, by the way. They're a $200 million market cap. So be careful of that. They're worth 200 million. But let's see, do they have any sales? So they do, but it did decline. The revenue's down 15% year over year. The whole company's worth 200 mil, and they lost 28 mil. That's let me do the math. 17% of the market cap, or no, 16. Anyway, that's not great. We definitely want to see them narrow these losses, and we kind of want to see the growth come back, I will say, because they have more liabilities than they have assets. They have more liabilities than market cap. So let me actually see their total. Yeah, the nasty total long-term debt, 66 million. You can't. It's not the end of the world, but what are analysts expecting actually? Let's see. Oh, that was a big beat on expectations. So yeah, they're expecting basically 100 million of revenue a year. Actually, so look, check this out. Actually, even though the revenue fell 15%, that was much better than what the analyst expected. So that's maybe why they kept up. But so you just want to be careful with this name. I wouldn't put a lot of money in this one. They're only worth 200 mil. But yeah. Hey, yeah, guys. I see BURU. Stay away from BURU, in my opinion. There's a lot of momentum. It's up 78% today, but they took like some $5 million stake in a company, or like, so, well, that's significant when the whole company is it's worth 60 million right now, but before today, it was worth 25 million. But here's why it's tough to buy this one and trust it. Look at the revenue, the sales, it's 9,000 down 97%. They're losing, remember the whole company is worth 59 million. Let's say you buy the whole company right now for 59 million. You're buying a company that lost 12 million, 16 mil, 12 mil. It's like burning through net income, a good, 10, 20% of your market cap a quarter. And look at this. They have a lot more liabilities and assets. I think it's hard to trust this one, but there is some momentum around it right now. HITI stock. HITI. That is high tide stock. I don't know what this is, but they're a very small company worth $300 million. But let's see what they do. Brick and mortar stores. So what do they sell? Pharmaceutical retailer. So it's a pharmaceutical retailer. That's some okay growth. The revenue's up 13% year over year, but the net income is really choppy. Like, at least was that real though? It was real. So they did make 600,000 in net income. That's actually good that they're not losing that much money. Because, when you're only worth 300 mil, losing a couple mil a quarter is really bad, but making a couple mil is really good. Again, brick and mortar, I don't know if that'll really outperform in the long run. Yeah, what app is this? Yo, what up, Slams? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. If you're on YouTube, which you are, it's in the description of the stream. It's on the YouTube description, the link tree. I also pasted it in chat. By the way, this is a software. It's a brokerage where you buy stocks on. Would you buy TLRY? I don't like this whole industry, the leaf industry. I'm getting questions about. First off, I can't really talk about this industry on YouTube, on TikTok. I get in trouble. They keep on taking down my streams, but so that I just don't mention that industry anymore. But I feel bad if you own this stock. It's seen momentum, but if honestly, I would take my gains, most of them, and probably get out of this company. Here's why. I'll just show you the numbers for yourself, and you can draw your own conclusion. $1.9 billion company, still a decent market cap. Like let's say you buy the company for $2 billion. So you bought the company for $2 billion. Here's the rough part. They lost $1.27 billion in net income this quarter. In the previous quarter, they lost $800 million. This money has to come from somewhere. It doesn't just appear out of nowhere. So look what that did to their assets. It depleted their assets. So the liability stayed the same, but their assets plummeted the exact same amount of the net income. Look, all these net income losses, I thought they acquired a company or something for these net income losses, but no, all that trouble for the company to decline year over year. Sales are down 2.3. So you just got to be careful with that one. Hey, what up, Mo? Good afternoon, man. Should Apple be a long-term hold in my portfolio? Absolutely. I wouldn't have Apple as a super large position, or especially at this price. I wouldn't make, if I wanted Apple, let's say you want Apple as 5% of your portfolio, I wouldn't make it 5% of my portfolio today, but I certainly would make it 1% just because this is especially since you have the intention to never sell, like it's Apple, it's still worth buying at all-time highs. Like, but I wouldn't put a lot, but yeah, it's a perfect long hold. KMI, is that Kinder Morgan? I believe this company gives you a K1 tax form, and this is an oil and gas pipeline company. So they actually have one of the biggest networks of oil gas pipelines in the US. Like they have one that goes like from Canada to Mexico. Let's see right here. There's some technical analysis, this app says. There is a double bottom with a rise probability of a 95% chance. But you're mainly buying the stock for the income, because if you look at the dividend, you get a 4.2 or basically 4.12% dividend yield. Yeah, look at that. 62% of the revenue is their oil or their natural gas pipelines. So let's go to the net income here. They're making good money, $740 million a quarter. Let's see how much the dividend cost. So they made $740 million, and the dividend cost $650 million. So yeah, they actually have room to raise it. Again, it sounds like a high payout ratio, but they have to pay out 90% of their income in the form of a dividend. And look at that. The company's called Kinder Morgan. Richard Kinder owns 11.5% of the shares. Anyway, I believe, correct me if I'm wrong, but I believe this gives you a K1 tax form. So be careful. What app are you using, or what's the app for this data? Yo, Keanu. Yeah, by the way, if you want to get the software I'm on, it's where a brokerage where you buy stocks on. But if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. Data Vault. Let me type in Data Vault. I don't know what that is. Oh, DVLT. All right. So the stock's at all-time lows. They're a $400 million company, though. Let's see. Well, actually, if we zoom in close enough, we can see there is some momentum here the past couple of days, but that's, anchor dragging off the bottom of the ocean there. Let's see here. Revenue is, not much revenue, like $1 million a quarter, but it looks like it has increased. Went from 300,000 to $1 million, but look at this. This is great news. Analysts are expecting 6 million and then another 6 million the next 2 quarters. So yeah, that's actually, watch out for those expectations. Maybe they gave some updated guidance. has grown 8% of my portfolio. Should I trim it out of my position? I would, Looney. Not like, I don't know you, Looney, but if you're like 10 years away from retirement, like you would be better off, I believe, like in the QQQM over this in the long run. 3M right here is just a bit of a slow, boring grower. Like if you look at the revenue, like every quarter, it's super low single digit, 1% growth. -1, 0.1, 0.3, 0.4. So the growth is super slow. The net, what is their net margin? It's not a company I see outperforming the S&P 500 in the long run. If you told me right now, would I rather own 3M for 10 years or the S&P 500 or the QQQM for 10 years at right now's prices? I'd rather buy the QQQM and the S&P at this price. You get a 1.84% dividend yield, but that's exactly why this won't outperform. Anywho, slow sales growth. I would probably, and you've done great on that position. First off, it's done really good. So, 3M has really recovered from its lawsuit prices, because remember, this company lost billions, like 10 billion from their earplug thing, where they sold the U.S. military earplugs that gave cancer. So it was unfortunate. But can you do Poet? Yeah, what up? Let's check out POET, Poet Technology. Oh, yeah. Hey, this is at an all-time high today. They're worth $700 million. They have sales. Basically, look, this company is transitioning from revenue list to real revenue. Same time last year, the revenue was 3,000. Now it's 268. Again, we're playing with super small numbers here. And analysts are expecting in 2 quarters, 600,000 of revenue. So revenue is going to go from 3 to 600K. That's good growth. Again, super small company. But they might finally have some revenue. You'd be so careful with that. It's such a small company, but I think that's what's happening there. What's your highest projected stock? What does that mean? Highest? I don't know what that means. Like a stock I hope will go up the most. I had kind of just all of them. Okay. I'm about to end the stream here. I have multiple portfolios. What do you think of HUD 8, American Bitcoin Mining? Yeah, hey, Nick, stay away from the Bitcoin mining companies, just because I've looked at all of them out there. I've looked at HUD 8, Core Z, Marathon, CleanSpark, Hive. I've looked at every single Bitcoin mining out there. None of them ever come slightly close to outperforming Bitcoin ever. Like they short term rhyme with what Bitcoin does, but they never actually outperform actual Bitcoin. So it has like on the when I zoom in, but basically. And HUD 8's actually one of the best ones out of all of them. Actually, I believe HUD 8 is slowly transitioning from like a Bitcoin mining to having some, using their server capacity for like cloud and stuff. So HUD 8 is one of the better ones, but just from Bitcoin mining companies, they don't do great. Another great crypto one is NU. This is a crypto bank out of Brazil, where they literally just offer customers like you can buy and sell stuff using crypto, and that's really popular in Brazil because that's where the currency sucks. It's not too popular in America, and they print money. This is approved by me. I love this one. They're making 500 to 600 mil a quarter, super growthy. So thoughts on yield max? Yeah, stay away from the yield maxes. Joe, wait, any long-term penny stock tips? If you're going to buy a penny stock for the long term, make sure it's one with good growing fundamentals. And even though you buy them, you can't trust a lot of money with them. Like DCTH is one that it's a super, like I would never recommend this kind of stock, but I found some value in it. And the value I found in it, as much as I like this company, I'm only trusting $150 with them. So you have it as small positions, and make sure you're buying one with good growing fundamentals. Like the fundamentals on DCTH and CRMD look so good. They're my favorite, like under $1 billion market cap stocks or like under $500 million market caps. What platform are you using to make this analysis? Yeah, hey, Carlos, by the way, if you want to get this app, it's in the link tree in my bio, the very first link there. And if you're on YouTube, you should be able to view the link tree. It's in the description of this YouTube stream. How long have you been streaming, bro? It should say on the YouTube stream, but I've been streaming for exactly 2 hours and 34 minutes. So yeah, my head's starting to hurt a little bit. Yo, what up, SWAT dude? So let's see. Thoughts on LIT ETF. What is this one? The Global X Lithium and Battery Tech ETF. So yeah, you can invest specifically in lithium and battery. Let's see what it owns. An ETF is just a basket of stocks, and let's see what stocks it owns. So it owns Albemarle, looks like some Chinese company. Wuxi, so a bunch of Chinese companies, or maybe Japanese companies. No, those are Hong Kong. So a lot of these names I don't know and I'm not familiar with, but I saw Tesla on there. Let's see here. Broadcom. Wait, what did you say about Poet becoming profitable? Oh, I didn't say anything about that. Poet is far from profitability, I believe. But yeah, all right, we'll look at Broadcom. Have you talked about Rich Tech Robotics? Yeah, hey, Crispin, I don't love Rich Tech Robotics. That one has no revenue, no IP, no patents. It's basically a startup. But the momentum's been really great on it. Congrats if you own that one. But here's Broadcom. Let's do it. This is a lot of people know them for their semiconductor solutions, but a lot of their growth has come from their infrastructure software. Check this out. In 2023, it was 1.9 bill a quarter, but it has rocketed up higher. And this is a good growth name. We go to the FCF, which stands for free cash flow. I mean, it's 6 to 7 billion a quarter, up 46% year over year. They're making 4 to 5 billion in net income a quarter. They're just really growthy. You get a nice yield too. It's kind of like Nvidia with the higher yield, 0.7% dividend yield. Would I buy it at all-time highs? No, it's a bit expensive, but I love the growth there. They totally deserve to be at all-time highs. How long have you been buying stocks? Since 2021 is when I started my first ever stock portfolio, 2021. Qubits, yeah, hey, what up, Qubits? This is that huge quantum momentum name. They're also at basically a new all-time high today. This is what I have trouble trusting. Like, if you look at the top right, they're a $12 billion market cap. I know what a $12 billion company should look like. I've seen a lot of $12 billion companies, and you're paying for so much future hopium and so much like future growth that I don't know if it's going to be there. But like the company basically, 3 mil of revenue, 15 mil. They lost 160 million this quarter. Well, they can afford that loss, but via issuing shares, the momentum's been crazy. I wouldn't trust it here though. But again, I've been bearish on that stock for a while, and it just keeps going higher. But if you see those kind of stocks and you see other people making money on them and you're not, don't be sad. Don't have FOMO. That won't last in the long run. Can you do AMD? Yeah, let's do AMD. So I do own AMD, by the way. I'll share with you that right here. They're actually now my largest position. We're up 70% on our AMD shares. They just had this huge OpenAI deal. Basically, OpenAI, hey, Justy, Yayota, thanks so much for the confetti. No way. Justy, if you got a stock you want me to look at for the last one, let me know. So AMD stock, basically OpenAI now has a 10% stake in AMD, and NVIDIA has a $100 billion stake in OpenAI. So we're seeing a little bit of a circular motion here. NVIDIA is literally now going up in stock price because AMD stock is going up because they own stock in OpenAI. Kind of crazy, but yeah. Let me pull this up right here. So basically, the bull market, we could be in another bull market through the end of the decade. We're in the next roaring 20s apparently. But check this out. Hey, thanks so much, Justy. I really appreciate that. Look at the PC GPU market share. Obviously, we know they have a 17% market share. They have their client and gaming business, their data center business, which has been growing very nicely. I certainly wouldn't buy AMD right now, right here. Like, yeah, the sentiment looks good for the future, especially with the OpenAI orders. But they've been beating on expectations every quarter. These are probably going to get revised up even more. They're making net income every quarter. They have no net debt. There's so many reasons I own AMD. I love them. And I've been saying for a while, I think this one's better than NVIDIA for the law of large numbers. Like if we look at NVIDIA in their market cap, let me show you this right here. NVIDIA is worth 4.5 trillion. So for you to double your money on NVIDIA, if you buy them right now, they have to be worth exactly 9 trillion. Isn't that crazy? They have to be worth 9 trillion. But for you to double your money on AMD, they only have to be worth 700 billion. So the law of large numbers that's why I bought AMD over NVIDIA. Sold my AMD yesterday, didn't like my position. Well, hey, Matthew, I get that. Let's see. Can you check out Plug? I will say sometimes if you don't like your position or something, I don't recommend fully selling out of it. Trim 80% of your position or something. Dude, I regret every share I've ever sold. Like, look at Robinhood. I sold 50 shares at $36 a share. I was buying the stock at, look, 10, 9, 8. So I sold all my stock for a 3X, but that was one of the worst mistakes I ever did. I sold 50 shares at 36. Well, now each share today is 145. So, rip. I still 3x my money, but anyway, Plug Power right here. They just got a new CEO. This one has had a lot of momentum. Hopefully the CEO can turn the company around. I just don't love this industry. It's charging vehicles. Again, when they get profitable, I'm not sure how much pricing power and net margin this commodity has, just selling electricity to cars. So I'm not sure how much pricing power they're going to get or net margin, but here's the tough part. They're burning through net income. They're losing 200 mil this quarter, 200 mil, 1.3 billion. Like the fact that they lose all this net income just makes me want to I just avoid Plug Power. Honestly, the better buy would be Tesla. They probably have a better infrastructure, but just the fact that they lose all that net income is, without them turning that around dramatically, I wouldn't have that as a meaningful size position. I put maybe some fun money, but not anything meaningful. What app is this? Yo, ISX. Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I'm actually going to end the stream here, so I guess I'll share with you some cool features. You can view all the super investors' portfolio like Nancy Pelosi. These are super investors by SEC law. They have to make all their trades that they do public. And you can now batch trade follow Nancy Pelosi and all these other investors into their stuff or whatever. Also, a new thing on here, and we can check the interest rate cut probability. Oh, and if you like finding new stocks and stuff, you're looking, you can, they have like certain watch lists, like the nuclear power watch list right here. The Nancy portfolio. They have a bunch of different investing themes, they call them, where they basically show, yeah, hey, this app is free. Yeah, hey, this is a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. Yeah, no monthly fees like with Robinhood. You have to pay $5 a month. Not with this one, or to get the yield. Oh yeah, and you can check the institutional tracker. See what Berkshire Hathaway, ARG, Soros, all these management companies are doing. But I wanted to share with you I want to talk about interest rates real quick. Yeah, so on October 29th, literally this month, on October 29th, there is a 95% chance interest rates are going to get cut. 4% chance of no change. So high chance of interest rate cut. Maybe watch out for the interest rate sensitive sectors. I think most of the market knows it. But anyway, yeah, if you want to get this app I'm on with my affiliate link, it's in the link tree in my bio, the first link there. If you go and deposit $100, we'll both get like some free shares. But yeah, let me end the stream with the stock portfolio update. This is our buy and never sell account. If you look at the top left, it's called buy and never sell, because once I buy stock in here, I literally try and never sell it. We also have our Webull account. This is our risk on portfolio. If you look in the top left, we're only up 18% all time in here. We've definitely underperformed. We've definitely underperformed the market in the long run, but we do have some winners. Like AMD's been going crazy. Robinhood, we're up 10x on. SoFi, Dave, I think SoFi was up like 5% today. 6.9%. Wow. And we do have some big losers like UiPath, Zoom, Sprouts Farmers Market, Tap, Calm. And then Robinhood right here is our final dividend-only portfolio. So every stock in here pays that's our Roth IRA. Over here is our dividend-only account. So yeah, every stock in here does pay a dividend. Every stock in here is also in the S&P 500. Probably heard of a lot of these names before, like Meta, Google, McDonald's, Constellation Energy. Yeah, here's us year to date. Yo, this April dip was a blessing. Even if you just didn't buy anything, if you just didn't sell, your portfolio is doing amazing. And also, finally, we have our Roth IRA. We started this pretty much exactly a year ago. We're up 17% on time, and these are all the stocks we've chosen to buy in here. So anyway, that was the stream. If you want to hit the follow button, we stream every single day. If you want to hit the follow button, I sell nothing. I have no course book. I'll never follow you. I'll never DM you. And by the way, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. And also, literally right now, I'm ending the stream right now, but right after the stream, I'm uploading a YouTube video. I'm calling it 3 high-quality stocks to buy now, and that actually have good fundamentals. Like one of the stocks I'm covering on there is Sprouts Farmers Market. I'm not just recommending this stock because they're off all-time highs. I'm recommending this stock because they have good quality fundamentals. So hey, if you want to hear my pitch, it's literally just like this style, kind of like a stream. I just using these apps as well. I analyze Sprouts Farmers Market and 2 other stocks. So I go over 3 stocks. You know, if you look at tech right now, a lot of stocks are at all-time highs, but I'm literally in less than 5 minutes going to upload a video. I'd really appreciate it if you go leave a comment, say, hey, I was on the stream, because my YouTube videos don't get many views, like 100 or 200. So anyway, I'd appreciate it if you subscribe to that one. Anyway, best way to support me is just subscribe to my YouTube channel. I'm trying to build it up. It's called Nathan Robert, link tree in bio. Anyway, thank you all. Have a great rest of your day, and we'll be streaming tomorrow. Again, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing, no course book. And hey, Random Fries, thanks, dude. I really appreciate you being here. See you, Looney. Hey, Looney, thanks for joining the Discord. Oh, yeah, but I don't really like to talk. I have a Discord you can join. If you wanted to join my Discord, it cost exactly $1. I only put a barrier to entry up because there was too many bots, like when I made a free one. So anyway, it's in the link in the description. Or if you become a YouTube member, you'll be able to see the YouTube member chat where I give the link out. It costs $1 to join if you wanted to. There's no value. You're not getting your dollar back worth in value probably. It's just to ask me a question. So if you have anything you want me to ask me personally or look at a stock for you,